before the
Check
film
1, 2.
begins.
What's going on here, man? Finally got my computer back up and running. Hells yes.
This leader is provided to permit the projectionist to complete adjustment of focus and
Yeah,
sound
sell off
level
right on the opening bell.
before the film begins.
It's a perfect channel art for today. Ooh, baby. Check 1, 2. I don't know what is going on here. Mic check 1, 2. Dude, I got all kinds of nonsense going on this morning. New monitor back up and running. Got a Senate hearing. Everybody on fire this morning. Fire. That's loud as fuck. Oh, dude. What is going on with Twitter, baby? Popcha is now following. Just send it, bro. Send it. What's cracking out there? What's going on? Got all kinds of weirdness going on this morning. Display issues, Windows 11. How y'all doing out there right now? Let's get right into it. I'm going to wait. I got a couple things I got to do here. I got some wonkiness with YouTube Studio going on. Slam an ad in there. 110, 100% edit. Got to keep the Russian bots out. We know how that goes. Gonna put the chat to newest. Subscribers only. Any duration. Save. Okay. Oh wow, we've got people already showing up this morning. Outstanding. Before you, like we're hot on the trail this morning. Did we catch the actual H line down here? Not quite, almost. Caught the H line down here. We got some stuff we got a gap above to fill. We got a little gap up there, a little H line right here. And I'll pop that in there. Little gappage to fill above. Let me do some work for you this morning. We got a pivot right here. Bunch of little gaps right here. Two little tiny gaps. You can barely see them. Let's see where. Yes, this is our one right here. Opening up in the cash market below pivot level. R1, S1 right here. There's not too large of an implied move to the downside this morning. And we're going to talk about why that is. But just briefly right now, you can see the implied move. Not too crazy. 410.05. 408.71, 406.64, 403.18, 401.85, and 399.79. We'll talk about why that is down here. How much of a move down there is, what we don't want to break down here. There's some support levels that bulls are looking to buy. There's some support levels bears are looking to get through this morning. I figured I'd put out some the past couple days, I'm like, oh, I'll put out some
So
video
Goldman
cards
Solomon
that are.
says the chance of a soft landing is meaningfully higher. So just commentary from Goldman CEO Solomon there.
See what you guys are saying. Good morning to all of you out there. Good morning, Fisted, Loner EU, Steve.
This stream is
Austin,
sponsored by
Millie.
TickStrike.
So loud.
TickStrike allows you to actually hear order flow in future.
Turn that down a little bit. It's crazy. Crazy sauce. I might have some issues this morning with audio. I got my stuff back up and rolling here this morning, so if you
far from over.
get some weirdness going on, if you hear anything, if you guys can just let me know if the audio is at any point too loud this morning, because we're gonna have the hearings on as well, and for you the Senate hearings. So make sure from your end if you could. It's weird. I've got mixing boards and then all kinds of other nonsense. I usually test this stuff in a private stream, and some of it I have not done at this point. So good morning to all of you out there. Fisted, Loner EU, Johnny Klopp, Spyplex, YCG, Calabacarian. I can't read that name. It's in dark letters of black, and I can't. Hold on, let me see here. Dom Mafia is in the house this morning on Twitch. Max Power, Big A Balls, Scots, Moto, Manvera, Joshua Titan, Captain Shansky, Matt Almarino, Derivative Yield, the Stock Market Show. I'm assuming that's the bot. H-Bomb, Cato, Nate, Play a Maid, Sunday Never Ends, 1256 Trader, Lisa Collins, 6, Patrick L., Femto, Griff, STL, BD, Brad Armitage, Big Balls in the house this morning. I got options is here. Okay. So these Senate hearings, man, it's like nails on a chalkboard listening to these people speak. I don't know if any of you. So my father was a lobbyist for part of his life. And so politicians would come by our family home when I was a child and visit on Sundays. And Sundays specifically because we'd go to church in the morning. And we'd go to church, right? And we always had like church stuff afterwards. Like we'd go have like donuts and stuff. We were I don't think it matters what I was, but I was raised. Oh, hold on a second. My dog is like, I got to check on you, bro, and make sure you're okay. Hold on a second. Come on in, buddy. So when I was a kid, I grew up kind of religious. Grew up in a city with large Irish Catholic population, and they took their religion seriously there, even though they didn't practice it. No offense if you're Catholic out there. They're like wannabe Mormons. But when I was a kid, you'd go to church on Sunday, and then you'd have donuts after church. Sometimes you'd go and eat brunch with the priests at the rectory, and then, or you'd go back and do your own thing. You go out for brunch, you go home and have a family dinner. My family, of course, my father and all of his friends would make their rounds to the house on a Sunday. So you'd get reporters there, and they were really cool because they'd take your photo, nice photos as a kid, and you'd be like, ooh, these are great. And then politicians would show up, and they would talk to your dad, of course, and my recollection from that young of an age was that most politicians they're like bums with money and power. I shouldn't say that, but they're not the most couth. They're usually sometimes very smart, but they're just normal people. Typically, that was at least my experience. So you'll have to listen to a lot of that shit in these Senate hearings, in my view. So we'll see if we can get through this eye bleeder, and we don't have any surprises. Hopefully, coming out of this. Sometimes we do get surprises. Usually, my take on it. I think I was talking to Winky this morning, and let me see what I said to Winky this morning. I said, in my experience, and we'll talk about some other stuff related to. I think I wrote, I said, usually they're browbeating, suck each other off, followed by a brief whipping. So, that's my experience. You let me know in the chat if you think they're any different usually. Not always. Not always. Every once in a while, they throw a monkey wrench in like dodgeball, and you got to duck and weave. We saw that last time we saw a monkey wrench. I think, if I recall, the last monkey wrench that I remember was when the Senate, I think, was yelling at Jay Powell about, I think it was Main Street loans, and it was absurd, an absurd conversation. Jerome Powell is actually looking out for the regular guy out there because the Senate's like, why aren't you giving loans to these people on Main Street? And he's like, we should just give them free money. Like, dude, none of these people are going to pay this money back to you. You're going to bankrupt Main Street America. And they were like, we can't do that. And he was like, just give it to him and then forgive him. Like, we're giving it already to big companies. You might as well just give it to the guy on Main Street too. If you really want Main Street to survive, and if you're a small business owner, you know they don't want Main Street to survive at all. They want corporations to survive. So that was kind of humorous to see how that conversation went down. If you guys remember that, I think that was during COVID, during some Senate hearings. It was bizarre to listen to, and of course, then you've got other Senate hearings where you have some politicians, or all these politicians buy tech stonks at the exact right time, and then they want to have Senate hearings on tech stonks, yet they own said tech stonks at the exact right time. So you're like, I don't trust any of these people telling me right now that they don't trust tech companies. They own these tech companies. Why are they doing this right now? Are they short right now? So it's a lot of browbeating amongst friends for an audience, almost like they're children, right? It's like my wife maybe saying to me, "I'm going to admonish you in front of the kids, and then when they're not, when we're done with me admonishing you, I'm gonna go. I'm gonna take you out to dinner or something." For the peanut gallery. We're the peanut gallery, by the way. Do you remember that stuff about church? I'm secular now, if anyone's wondering. But at the time at that time when I was a child, it was probably the last generation of that was heavily religious. I know some parts of the country are still religious, but at that time, secular people, everyone went to church. We're talking about that. My wife and I were talking about that this week. We're like, everybody, not everybody, but a fair portion of society was still connected through their community churches across the United States at that time. We know that's not the case for most of the public, like it once was at one point. They were a part of society, or a major part of society, just like TV was a major thing at that time. That's what it was like when I was a kid. So good morning to all of you that are out there. Good morning. Good morning, old camera guy. Good morning, Chaz. Chaz. Oh, Chaz, Chaz, we have an event on the Fed TV this morning, brother. We got one scheduled, my man. Chaz and I are talking about scheduled events. And today we have one. In 12 minutes, we have the Fed chair speaking in front of the Senate. We're going to go do a brief overview of that. And this starts in the next 10 minutes. So I'm going to turn on those hearings in the background for you. Squeezing higher now, trading above the 1 and the 5 minute. You should see some shorts coming off the market, as a matter of fact, as we head into this. And we'll talk about. I'm going to show you. I'm going to do a couple things for you this morning. We'll give you a couple places to look for to buy a dip. If we start squeezing, what to look for right away off the get-go, though. I'm going to tell you this, just like every day, right? You start to see price trade above. It's the 5 minute. Excuse me, I got a cup of coffee here. See price trade above the 5 minute and the 1 minute. Right, there would be the 1 minute and the 5 minute, and then you see price trade above. If it trades above with a retest confirmation, you can usually I usually will take a trade right there. So if we can get something like that at any point, that would be a beautiful trade, right? Take that
So
to
in 10 minutes
natural
time now, at the
resistance
top
point.
of the hour, we are expecting the event for Fed's Powell to begin. So it does not appear we're going to be getting an early release of the text for Fed's Powell, as it has not come out yet. But again, the event itself due to start in 10 minutes time. That's at the top of the hour. It's also this time to get some US data with the US wholesale inventories month over month revised. Forecast minus 0.4% from the prior minus 0.4%, and the wholesale sales month over month forecast minus 0.5% from the prior 0%. So keep in mind, I will be prioritizing Powell's comments if they do come through at the top of the hour.
So we'll have the news squawk on in the background this morning. And we will also, I think is it going to be on the Fed channel by chance? I think it is. Let's see here. Oh, everybody's got a live stream on this morning. Everybody's live streaming. Jerome Powell live, Fed inflation, SPY NASDAQ, hashtag. Interesting. Let's find the Fed channel, see if it's going to be on there, if it's going to be on C-SPAN. Federal Reserve channel. Hold on. Nope. Not seeing it there. Good morning, everybody. How are y'all doing? I should have put laser beam eyes. I totally should have put laser beam eyes for that. Let me see here. Capitol Hill policies. We can do that one there. Maybe the PBS usually has a pretty good one. Okay, so I've got the PBS version on. Usually they'll let people talk. I'll delete that right there. And we're going to take a look at some levels this morning, okay? So I've got this on in the background. And I will right there. See if I can read this for you here. I'm not in any trades at the moment. If you're wondering, I am flat right now. We'll put that up, I guess. So we can put the flat up. The options market right now, it's good. I'm looking at the SPY 0 to 8 options complex at the moment. Everyone is weighted on the call side right now, and so I can get some wonkiness going on here in the background. There's 25,000 calls on 405C for $1.47. The options market is light this morning. I'm not seeing a whole lot of pricing in on this part of the Senate hearing on either side. Sometimes you come into these events and you'll see a I'm going to put this in here. Sometimes you'll see a heavy call or a heavy call on put side to this market. You'll end up seeing like calls are $2-3, 0 to 8s. You'll see puts at $2-3. They'll price all this stuff in. Not seeing a hell of a lot in the options market at the moment. Good morning, Regenerator. Morning, Satchel. Good morning, John Haggerty. Senators are calling their brokers. Get me out. Let me see if I can get you guys a quick update. I'm going to show you real quick some places you need to know. We're going to switch over really quick to, I believe we can switch right over to the trigger right here. So just for the options complex, I'll go through SPX. If you're on SPX ES, you can get some of your levels here. You want to be aware of 403.51 402.12. And then major levels of 398.11 and 395.66. Now, there's some major support here in the market on SPY. We have got
So we're
1,
now
2,
5
3,
minutes away
4.
from the top of the hour, where again we are expecting the event with Fed's Powell to begin. Again, we did not see a pre-release of his prepared remarks, so I assume these will be coming out at the top of the hour. So as well as Powell speaking, we do get some US data with the US wholesale inventories month over month revised. Forecast minus 0.4% from the prior minus 0.4%. And the US wholesale sales month over month.
You really don't need his prepared remarks because he basically gave them on Friday. We'll go over, if we have time, we'll go over that this morning. If I can get this thing to load up in the background. But some key levels for bulls, specific two key levels. This yellow line right here is the beginnings of a bullish trend. These trends, if confirmed, if we trade down and find support here, right, and we stay above here and start to go higher, usually these last for 3 weeks, 4 weeks, 6 weeks, 8 weeks. Talking the month of March and the month of April here, believe it or not. Bears would like nothing less than break below this level here with some conviction, and then swing back high and start smashing through and changing trend. Reversing course, getting underneath the weekly and the monthly, and change this back into their favor. They need this. Believe it or not, no matter what volatility we have this week, this is their plan. They need to get underneath the daily. They need to get underneath the weekly and the monthly and reverse course and get back on trend to lower lows for the month of March for the JPM collar. This is their entire plan for this week for volatility. They're banking on this the next couple days into Thursday and Friday. If they don't, if this holds up into Thursday, Friday, it's off and running for bulls. So as a bull, you're looking for a dip to buy down here on one of these lows. You're talking about 395.57. Talking about 398.08. You're talking about 402.13. And specifically, these two are the drivers. Like these two, the green and the yellow right here, these are market drivers. They are trend drivers. You stay above these two lines right here, the green and the yellow, and you're rock and roll, okay? SPX, I'll show you your levels. And I'll do ES first, and then I'll do ES first, and then I'll do SPX. Hold on here. So we can get this a little bit closer here so you can see it. Kind of see those same levels right there. You've got 39.62, 4,050. This is on ES. And then you've got 4,038. And we are trading below the hourly currently on ES. Not healthy for ES right now. I would expect some kind of a target down below unless price gets higher at 4,037.75. And you have the 5-minute crossing over in a barrow-plane over the 1 minute currently. Now you'd want to see price get above more than likely all of this cluster right here to be bearish or bullish again at 4,054.75. SPX. For SPX gang out there that are hedging markets with the reasonable tool. You've got a nice little cluster down below here. The hourly is screaming up right now on SPX. The SPX actually looks juicy today. You can see that hourly just screaming higher, screaming higher. This might serve itself to be a beautiful cluster once all of the vol comes off of this event. So keep your eyes on SPX this morning. You've got this cluster at 402296. You've got 402965. And then you've got price currently below the 5 minute at 404762, but right somewhere up in here today. Keep your eyes around 403137 somewhere in here. If you can track, make sure I keep tracking this, because if you see both these come up right here and you see that one come right up in there, and if at any point price gets above these four, it could be an explosive move for SPX today. So keep your eyes on SPX. And we'll switch back to the regular stream right now. Look at that. Rug puller. Look at Bookmap. Bookmap's like, I'm going to draw some of these on the chart for you this morning. Look at SPX with the rug pull underneath it. SPX is, look at it. Oh, there it goes. There goes the rug pull right there. Look at that rug pull on SPX. Did you see it? Boom, right into 10 o'clock. Drop your pants off, baby. 403.56 right now. Took out the previous low from yesterday. Previous low right here. Now tagging the S1 at 403.18, almost to the T. Look at that, huh? Drop your drawers, baby. It's 10 a.m. Unreal. Let me see here. 10 o'clock, and I don't even have any J-Pow on yet. Now trading 402.80. If you're in puts, get your money out.
We are waiting for Jay Powell. He has just sat down. As you can see, maybe he's got up again. Needs a new chair. There we go.
Jay Powell just sat down, and so did the stock market. Trading 402.55, 65. S2 right here down below. If you can get your money out. You guys like puts? S1, S2, baby.
Today we've
got 401.85, tagging SPX on the hourly and on the daily trigger currently. I gotta get some fucking calls. Hold on here.
What is happening on Capitol Hill today? So let's kick it around. Let's get a sense of what is happening here.
Got buy some calls right here. Hold on.
Joining us, Mike McKee, with you in DC. Ira Jersey, our rate strategist, joining us. Anne-Marie on the politics. Ed Ludlow here to talk about jobs, particularly jobs being.
No. Don't leave me behind. Let me get the calls.
Mike, let me start with you.
No, I'm missing calls.
If you were to
Shit.
put a date stamp in terms of the data.
No. We just tagged the hourly and daily. Give me the money.
How are we going to get here today? Is it the last payroll report? Is it the ISM services number, which showed that incredible strength? How should we think about what Powell is going to be saying?
Oh yeah, we just tagged the hourly and the daily on SPX and SPY.
Fed meeting. We have the Powell headlines out now.
Tagged S2, blasted through all the pivots from the day before.
What he has said before in the past that the Fed is.
Hold on, let me get a better. See if I can get a better Senate hearing. I got blabbers in the background here. Bloomberg, PBS NewsHour. He's still taking a seat right now. They just blasted right through. Blasted.
$1 million pesos. Or
no, we got a bunch of ads going on in the background here.
Has been expected to give. Don't expect a whole lot out of him in terms of specifics, although he does say that the economy's strength suggests the peak rate could be higher than previously anticipated. Remember,
look at that bloodbath right off of
14th meeting. 10 members of the open market committee
bloodbath right off of the. You can see it right here, right? The rug pull just before it ended up happening down here.
Wouldn't take much to move that higher, and given the
I'm going to show you something real quick. I'm going to switch over to the trigger real quick and just look at that. Right, this is SPX, right? This is the green and yellow line blasted right down to daily and hourly trigger. You're going to look for a trade higher back up to 4043 if they can get it. The weekly and monthly trigger sitting below at 390.88.75 and then 396.41, I believe. Unreal. Let's look at what's going on with ES.
To react to that data on Friday.
ES below the hourly, looking to trade higher and find a rejection at 405. 4.25. Let's look at SPY real quick. Look at SPY, baby. Blasting right through the minute, the 5 minute, the hourly, right down to the daily trigger. Right on the daily trend trigger. Talked about this yesterday, slamming down on it. 40326.
March 22nd meeting, and it'll be a closer
40326 right here.
All right, Bloomberg's
right there. We'll keep that one over there.
In Washington, thank you so much. And I would note that the bond market is reacting to these initial headlines out of Powell. The 2-year Treasury yield right now up 7 basis points.
Right there, baby.
96%. So let's get more on that now. Ira Jersey of Bloomberg Intelligence.
This is the daily trigger right here. I'll make this one green.
Ira, so it looks like maybe there was indeed room for a hawkish surprise, even though we have seen such a dramatic repricing in recent weeks.
Yeah,
This right here is your
I think that
daily
the way
trigger.
that I read the opening remarks, they are a little bit more hawkish. I think the market reaction with the bear flattening of the yield curve is, it is appropriate for what.
It's funny when I hear these people talking, I'm like, no, they're just short the market and want to get paid.
To move higher, and they're not seeing any disinflation there. I think hitting on a home on some of the
Right there, daily
some
trigger.
of the speeches that have been made since the last meeting has been somewhat effective here in getting the market kind of lined up for the idea that, hey, maybe we will see slightly higher dots like Mike was just talking about, and at the same time probably means that not only will you get 25 basis points at the next two meetings, but maybe
Hourly trigger right there.
maybe a 50, and the market is going to price for some chance.
And you see your 1 in 5 minutes right there.
Ira, let's talk a little bit about what's just been said. The ultimate rate peak likely to be higher than expected.
Straight rug pulling it. Called it like 5 seconds before it happened. I'm looking at Bookmap. I'm like, what the fuck is that?
Or is that higher than expected in current market pricing?
So I think the market thinks it's market pricing, but I think when Jay Powell says that, he means the dots. So, which is not a huge surprise, just given the strength of the data that we've.
And then we're going to look below to, we got SPY, and we're going to look at the weekly and monthly.
Maybe a few more dots to
we've got 397.87.
In fact, if you look at where the headline year-on-year PCE price deflator is, we're around 5.4%.
Here's one right here.
Never stopped hiking until the Fed funds rate equaled the year-on-year PCE print. So basically, the Fed has to still hike another 75 to 100 basis points in order to reach there. So when Jay Powell says higher than expected, he's talking about the December dots, and I think in a way he's kind of prepping the market for those dots to move up when we get the
no, they're not.
When we get the next SEP in 2 weeks.
Ira, great stuff as ever. Thank you very much indeed for the analysis. Ira Jersey of Bloomberg.
The only thing keeping this market up is
let's get the politics angle
increasing rates.
Now, Bloomberg's Ambry Hordern on Capitol Hill as well.
All right there. Weekly trigger down below. And then you've got below this here, you've got one more.
Well, this is going to be a question. You're going to see Republicans really try to get Powell to
395.60.
The Biden administration is doing on the fiscal side is excessive spending, but Powell is really
right here.
Pause when it comes to any sort of political goading that they're probably going to try to rope him in. So the Republicans, it's going to be about the budget. We also had last week a letter from 9 Republicans to Powell talking about their concerns about capital requirements for banks, and also they're probably going to try to get Jay Powell to talk about the fact that it was some of this fiscal spending
bluish
that added
too.
To inflationary concerns. Then, Guy, you have to take the Democrats as well. They're going to try to get Powell to say something definitive about the debt ceiling and try to convince the Republicans.
There we go, right there.
Of the debt ceiling, and then there's going to be.
And here goes your S3 over here.
Warren. In the past, she's called him a dangerous man. She wants the number 2. Now that open
S2, S3, S1. Now trading 497 on the SPY.
Powell, because she thinks these rate increases are going to lead to job
right
losses.
There.
So there's going to be a lot of political.
Now I'm not seeing. See if I can get. Yeah, still not seeing coverage.
Produced 80%.
There we go.
Of it. When I was there last week, I was talking to the sheriff at the 1820 Candle Company. He was talking about how the last one closed just a few years back. Like so many industries, these jobs moved overseas, and we know why. The same reason.
I got some headlines for you at this point. We've got U.S. short-term interest rate futures drop after Fed chair says rates may need to go higher and faster. Initial reaction would be that we might get higher rate increases, right, than anticipated. Fitch says as revenue growth slows, widespread state actions to build reserves and address long-term liabilities will protect our state's credit quality. Then back to Fed Chair Powell. Continuous policy rate increases are likely appropriate in order for stance to be sufficiently restrictive to get inflation back to 2% over time. Fed funds futures are now pricing in a half-point rate hike for March, and Fed swaps price in higher peak policy rate of 5.61% in September.
Not only will higher interest rates not solve it, if they're overdone, they'll make it worse. We can't.
Oh,
risk
yeah,
undermining
baby.
One of the successes of our current economy. For the first time in decades, workers are.
I guess I didn't get my 401 like I wanted it by. Well, I said I wanted it by the start of today.
That's not just a number.
Now trading 40075.
Even in places that have seen a lot in recent years, it means people have the power to demand raises and retirement security and paid sick days and some control over their schedules.
Yeah, did you guys pick up SDAO?
Have the dignity.
The June SDAOs?
Good job that provides for your family. We must here ensure that all Americans have the opportunity for that dignity of work. It's a critical time.
Let me see what you guys are saying inside the thing here. It's funny. It's funny. I talked to Joe Donut last night. And he said, "Tell me you have a hedge in the market. Please tell me you have a hedge in the market."
Yield climbing 7 spots.
Let me find out if he does. I got to see if he's gonna take the money and run.
Paying our bills on time, they're essentially threatening all Americans. The Fifth Circuit's Consumer Financial Protection Bureau ruling could also cause unimaginable instability and chaos for families, for consumers, but also, as the chair knows, for a financial system. The Fifth Circuit is Wall Street's, no doubt about it, the Fifth Circuit is Wall Street's favorite courthouse.
Yeah, you had the June SDAO. Joe Donut picked them up too.
U.S. stocks extending their full Nasdaq down by 1% now. S&P down by 1% also.
Can you hear the voice? Can you hear the guy talking in the background on the Senate guy just blabbing?
Including the Federal Reserve.
Can you hear the news squawk at the same time?
How the Fed will balance its dual mandate and continue to promote an economy where everyone who wants a good job.
Yeah, I'm looking at 405 C's. If we can get up, hold on a second here.
Sorry.
401.96.
Sitting here.
So Fed swaps repriced now to favor a 50 basis point hike in March over a 25 basis point hike.
Yeah, take the money and run. You're going to take the money and run. Daily trigger's 401.96, and then we've got the 1 minute at 402.56. Do you guys want to just look at that chart? Well, let's just switch over. Hold on a second here.
To make sure that happens at every question, every questionnaire. That is.
You guys just want some? Do you guys prefer to just have it like this, maybe?
Every member of this committee has their questions answered.
You can check this on your own. What you're looking for here is
answers in a timely fashion.
If you're a bull, I guess. Let's start with the bulls.
I thought to myself, fascinating. Truly fascinating.
I'll give you the bulls first, then we'll go to the bears.
I concluded that
bulls want to see price 401.34, right? They want to see price get over the daily trigger, reclaim the 1 minute, retest it, and start to head above. The 5 minute here is the big one, 404. If you're a bear, you are looking for
to the radical left in this country, seeing policies posited and then implemented.
You're looking for a rejection off 401.96, and you're not seeing the 5 minute get too nasty here. The 1 minute's nasty down here, but if you're not going to see the 5 minute really get down there, you should see a price trade at least, maybe before we head back down even lower. So we'll watch the 5 minute and see what happens here.
That the progressives in this country who caused a 9.1%.
Let me check a different chart here and look at the velocity of that move.
Somewhere besides in the mirror, to see the absolute devastation caused by their out-of-control spending is remarkable.
Weak on the hourly.
Remarkable.
1 and 5 minute should trade higher from here. The daily is weak. The hourly is weak. The 1 and 5 minute are not. They're stronger right now, so take your puts and look to reposition yourself
if
you have to.
Because we've seen the most radical approach.
Gorgeous.
To a problem that
we tagged the green box, baby. Woohoo!
Being used as a Trojan horse to bring in a level of socialism and spending that our nation has not seen in my lifetime.
Look at that. Let me show you guys. This is pretty cool.
Very simple. When you get to 9.1% inflation in this nation, as a kid who grew up in a single
look at that dip right there, baby.
Poverty,
look at that bloodbath
today,
down there.
100% just a year
This is the first red box. This is on the yesterday's stream for the placard. Trade up to the first box. No, blasted straight through the daily right here.
whose
This is what
savings are being
decides trend for the
depleted
market.
with an
Bears
average
want
cost
to
just last
or at
month
least
of
close the day under
$433
40187.
increase because of
Major,
inflation.
major place for the
my
Bears
friends
to
on the other
reverse
side of
the
aisle to
market
look any place
down.
besides a mirror,
I bet you Mike Wilson
I
right
find
now is
stunning.
like, close this
The
shit
truth is that when
underneath
your food prices go up
40187.
over 20%.
I'm going to
When
show
your
it to you on a
electricity is
daily
up over
candle here.
20%. You have to ask yourself,
What the
where
Bears
in the
want, baby.
world
This is what the
are
Bears
they?
want. I'm waiting to see
They
this right
cannot
here.
be
Let me mute this.
in it must be an alternate universe where, in fact, it's okay for us to see prices go through the roof.
I'm going to show you what a bear
and
wants.
our economy not stumble, but fall into a ditch. Why are we in the ditch?
So I want you to see this right
Because
here for
progressives
trend.
used the pandemic as a way to usher in a form
Going back to the goat, right? We're going to go back to the
spending
goat. What the
takes
goat
money
tells you.
out of the
Ready? This is the goat
pockets
tells you,
of
right? Follow the
everyday
yellow line right
Americans
here. When we
and
trade
puts
above it,
in
we're
the
bullish,
coffers.
right? When we trade underneath it,
Government.
we're bearish for a significant amount of time
There
in
is a better
price.
way.
And you can see
The
right
better
here,
way
we're
is to trust
sitting
the
on
American
that
people.
yellow line right now.
And when
And
you
a bear
do
wants
so,
nothing
we
less
don't have to have the Fed
than
come
stay
in
underneath that yellow
and
line.
raise
So
interest
if you're
rates
looking at
so high to quell
you're
the
looking at this yellow
challenges
line
in our
right here,
economy, so that today versus
they can get
18
price
months
to stay
ago,
underneath
the
it. If
price of
Bears
the
can
same
get this,
house
this is a huge win for Bears
your
if they can
mortgage
close
payment
under this,
is twice as
because
high.
then you're talking about trend
Why?
being
Because of the
down.
runaway
And
spending
from a bearish point of
of our
view,
friends on the other side.
bulls today need to get
I'm
above
sure I do not have
the
time for
daily
my
trend
opening
to
comments. I
maintain
will say without any question.
this move higher and trend higher for March and
As I
April. If
look
they don't
around the country,
maintain this yellow line,
and I ask
bad
myself,
news for bulls. Absolutely bad
how
news. Bulls did not
devastating
want this
is it
open to this morning
that today it costs
in any way, shape, or form,
$433 more
without a doubt.
dollars
So going right
than
back
it
to the
did
1 minute,
a year ago. The answer is
so you can see it. This is the SPY at
a
least.
crisis. When the average family in our country just a couple
Right
years ago
there.
didn't have
You want to see this 1 minute right here? Bears looking for rejection off of 40195. Bulls, you need to blast off, baby. You need to reclaim a whole bunch of stuff over here
around the country.
to stay on trend.
Looking at the
So we'll see
inflationary
how high
effect
bulls
and
get
the
today. I'm going to give you some
absolute
levels. Snap them at
devastation
home.
of a snarling
40195,
supply chain we
40218,
haven't seen in my lifetime.
40322,
Run by my
and
friends in the progressives.
40376. I'll list them off to you one more time.
Unbelievable.
Get a pen and paper, baby.
Get to
Get a
you,
notepad.
Chairman Powell.
Get a voice recorder.
One of the comments that you've made. that I
Get
think
your
is really important,
girlfriend's
one of the
dog
speeches you gave in
to read
January,
it back
and
to
I
you.
apologize for my rant. I apologize for my rant. This is
401.92.
my friend here. It is
40208.
essential, you said, that we stick to our
40321.
statutory goals and authorities. and that we resist the
40378.
temptation to
You can
broaden
see that
our
the 1
scope
minute's
to address
starting to get
other
a little
important
less
social
bull-
issues.
less bearish here. You see the initial reaction is going away in the 1. Initial reaction is going away on the 5. The hourly, though, kind of weak. In the daily, you can't see it here. The daily's kind of weak. So you need to get above the daily. You need to get above the hourly. Bulls, dude, need this so bad. They don't get this. Big bad juju's coming. Bad, bad, bad.
To promote a greener economy or to achieve
Look at
other
that.
climate-based
Amazing.
goals. We are not and will
And just
not
like
be
that,
climate policy
market sentiment has
makers. Do you
changed.
still stand by those comments?
I do.
40189.
Finally-
It's somewhere down here.
We're not
40189 right in
Finally,
here. This is what the Bears want to hold
I knew
right
the
here.
chairman would dock that from my time, and I appreciate you doing so.
Unreal morning right here. Right off the open, you could see
Finally,
it
several
right
of my
here, right?
Republican
The
colleagues
rug
and I
pull, setting
sent a letter
itself
to you
up.
discussing Vice Chair
What was that?
Supervisor's
Seconds after I
Vice
said
Chair of
something about the rug
Michael
pull?
Barr's
They
plan
went,
to conduct
woof.
a holistic review of capital standards. I look forward to discussing those capital standards during my Q&A, and I will thank you for our recent conversation that we had that helped illuminate some of the necessary challenges that we face as a
And
nation
young Ness is
and
like,
the
I bought
answers
more
to it.
puts.
Thank you, Mr. Chairman.
Young Ness is like, we're going to reject here, or we're going to trade and hit these lows. Now, I want to let you guys know
Chair
something.
of the Federal Reserve, Jerome Powell, on monetary policy in the state of our economy, and I don't expect Chair Powell to weigh in on.
I'm going to mute this guy talking real quick. I want you to know something, okay? Now, how do you day trade this? As this cools off a little bit, how do you day trade this? What you're looking for if you're a bear is you're looking for two places, okay? I want you to watch this red line here and this white line here, okay? You're looking for price to pull back at some point, pull above, and tee off. Right? You want it to tee off to the next level.
On the stand live, delivering the semi-annual monetary policy report. Again, the text release for this has already been put out, and all of the headlines for which are on the feed. So just repeating those comments live.
J Powell's talking right now.
Ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do. Our policy actions are guided by our
next place is above right here for the red line. I want you to key into these lines right here, the 1 and the 5 minute right here.
Anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. I'll review the current economic situation before turning to monetary policy. The data from January on employment, consumer spending, manufacturing production, and inflation have partly reversed the softening trends that we'd seen in the data just a month ago. Some of this reversal likely reflects the unseasonably warm weather in January in much of the country. Still, the breadth of the reversal, along with revisions to the previous quarter, suggests that inflationary pressures are running higher than expected at the time of our previous
78,000 puts on 400p right now.
From a broader perspective, inflation has moderated somewhat since the middle of last year, but remains well
trading
above
$1.08.
The FOMC's longer-run objective of 2%. The 12-month change in total PCE inflation has slowed from its peak of 7% in June to 5.4% in January, as energy prices have declined and supply chain bottlenecks have eased. Over the past 12 months, core PCE inflation, which excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and tighter policy has restrained demand, inflation in the core goods sector has fallen. And while housing services inflation
now trading up to test
high,
the 1 minute,
the flattening out in rents evident in recently signed leases points to a deceleration in this component of inflation.
trading 401.85.
That said, there's
retesting the daily trigger here. This is where the bear wants to stay underneath this daily trigger right here. This decides trend. If we trade above it, next target above is going to be 403.38.
To restore price stability, we'll need to see lower inflation in this sector, and there will very likely be some softening in the labor market conditions. Although nominal wage gains have slowed somewhat in recent months, they remain above what is consistent with 2% inflation and
hourly trigger above is at 40332.
Is good for workers, but only
40332. That's a cluster of hourly above, and we have the 5 minute trigger above.
Significantly last year, with real GDP rising at a below trend pace of 0.9%.
Welcome to the show, boys and girls. Press that like button.
Pace this quarter.
Chaz, clip that clip where I said they're going to rug pull, and then 3 seconds later they did it.
Production. Activity in the housing sector
clip that clip,
weaken,
brother, and post that on FinTwit.
Mortgage rates, higher interest rates, and slower output.
Cheers, beers.
Appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market
that just ripped through every call out there in the market. Probably
3.4%.
Anyone long calls into this morning, gone. Calls all week long, gone. They got to buy all new ones.
In January, while the supply of labor has continued to lag. As of the end of December, there were 1.9 job openings for each unemployed individual, close to the
now squeezing higher, 402.37.
While unemployment insurance claims have remained near historical lows.
A little bit of VIG coming back in the market right now.
Policy. With inflation well above our longer-run goal of 2%.
1 minute coming underneath the hourly and daily trigger. The daily trigger and 1 minute cluster, 2 trigger cluster forming right now. If price can hold the hourly and the 1 minute, it should trade up to the 2 minute and the hourly trigger.
Ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized.
Dude,
especially
Joe
on
just
inflation.
closed his
In
Estelle
light of
puts at the
cumulative
best
tightening
possible
of
time.
monetary policy and
Now
the
time to
lags with
reset
which
him.
monetary policy
Or
affects
Estelle triple leverage
economic
calls.
activity and inflation, the committee slowed the pace of interest rate increases over its past 2 meetings. We will continue to make our decisions meeting by meeting, taking into account the totality of the incoming data and their implications for the outlook for economic activity and inflation. Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes.
So Fed
Restoring
Powell's
price
prepared
stability will
testimony
likely
to the Senate
require that
Banking
we
Committee
maintain
ends,
a
and the question
restrictive
and
stance
answer
of
section
monetary
now
policy
starting.
for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across
I'm
the
on
country.
Twitter this morning.
Everything we do is in service to our public mission. At the Federal Reserve, we will do everything we can to achieve our maximum employment and
Two
price
trigger
stability
cluster
goals.
right now. We'll see if we can get a squeeze higher to next stop above
Thank you,
is
Mr. Chair. There are
403.
23 of
Next
us on
target
this
above
committee. Almost everyone will be
40326.
here today. I ask each of us to stay as close to the 5-minute mark as we can because we have votes at 11:30. So thank you all for your cooperation. Chair Powell, thank you. Job growth is strong as unemployment remains historically low. You might not know that from the opening statements. Many drivers of inflation, corporate greed, rising inequality, supply chain disruptions.
Corporate greed, my ass, dude. What about Senate greed?
If you will, in
in the goods
Ukraine
sector.
won't get
But you
better
also see
because of
that in the
interest
labor
rate
market.
increases. Every indication is that this
This is a joke, right? See if I can speed
This
up this
stream is
playback.
sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
This is going to speed up J Powell talking here.
Which had significant effects on commodity prices a year ago. So all that is different. There are also, though, some similarities. there is a mismatch between supply and demand. You can see that in the goods sector still. You saw it in housing prices going up over 40% since before the pandemic, and you see it in the labor market where we have 1.9 job openings for every opening for every unemployed person. So we're well aware that this particular situation involves a mix of cycles of forces.
Powell says the Fed has
not
a
all
job
of which
to do
our
to better
tools can
align
affect, but there is a
supply and
job
demand.
here for us to do in better aligning demand with supply.
Okay, understanding you have limited tools to address inflation, and our conversations in the past show my concern about continued rate increases that may not actually address the root cause of inflation. They hurt workers, and many of us contend we can't follow the same old playbook. Next
Price
question.
still
Last
trading
year,
underneath the
3
1-minute
banking
trigger and the
regulators
hourly.
issued
Bears
proposed
trying to
updates
sell
on the
off of
Community
the hourly,
Reinvestment Act
using the
to
hourly
account
and
for
daily
changes in
trigger
our banking system.
or minute
My
trigger
question
to
is, does
try
the
to get
Fed
new
remain
lows.
committed to work
We've got a
with
couple of
FDIC
spots down
and
below if
OCC
we're able to keep price
finalize
below
the
the 1
CRA
minute.
rule, and when will that rule
399.12
likely be
and then down
finalized?
below that
Yes, we do remain committed,
397.85.
and I believe we are in broad agreement with the other two agencies on the revisions to the rule. So now we're in the process of writing all that down, and that'll take some time. And then after that, of course, it will come to the Board of Governors for a vote, and that'll involve briefings and discussions. And I can't give you an exact date, but
But as quickly as possible.
Yes, but it will be some months.
Okay, thank you. Banks weathered the shock of the COVID-19 shutdowns mostly because of the fiscal response provided by Congress. We now see a spike in loan delinquencies, an increase in overall risk. Banks are again plowing billions, as many other corporate leaders, always defended by people on that side of the aisle. Into stock buybacks, which makes me concerned that there's a downturn in the economy. Banks could end up with too little capital. That's why I'm worried about any potential
Price can get
rollbacks
above
of
here. I'm going to
safeguards
grab
or
some
regulations.
calls, but only if
Can
we
you
can get
assure me that
above.
the Fed will keep capital requirements
Let me mute this
strong
for a
and
minute here
exercise more
so you can see. If price can get above this minute trigger here, it's starting to the 1 minute here is leveling out a little bit. You're not seeing the velocity to the downside move here. So if I can get price above to hold above 40188, what I'm going to be looking for first is the trade above, the retest, and then the trade here somewhere. But I want to see that price get up there. If price can't reclaim the 1 minute and retest
the
it,
crypto space, as there's quite a lot of turmoil there.
if price can't, so this is the 1 minute right here, right? If price can't get above and do a retest, that's what I'm kind of looking for somewhere in here. So if I can take this trade right there, I will. But until I see price get above there, it's still bearish here. Currently, it's bearish. But if we do get that squeeze, because of the time it's taken down here, it is looking bottom-ish to me. The hourly is still kind of rough right now. I'm probably going to be looking at, I don't know. 402s are kind of expensive. They're $1.35. 403s are 95. Probably 404s, something like that. 404s are 64 cents currently, so if I can grab these. All right. Let me see if I can change this. Captain Underpants Paper Hands is long. Let me see what I got here. Flat. Captain Paper Hands is long here. So we're going to see if we can trade up.
Cable fell to
We're going to look for a retest of the 1 minute here as well. Be careful, of course, of liquidity breaks to try to take you out, put some stops on you here. And I'm looking for this red line above. I might want to get some 405Cs too. Those are, I've got some 404s, but I might get both. Here, hold on here. Where's 405? Return to the scene of the crime up here. I don't know. Give me a second here. I gotta check to see. Look for a retest of the 1 minute right here. You don't want to see bears throw it over. Have some stops. I just set some stops for me here. Sometimes what they'll do is they'll try to stop you out on right down here. I'm sure they're going to seek out your stops right there. If they do, right there, they're going to try to stop you out. Almost guaranteed. Got to put the old cap locks on here. Right up in here, target above, just below 403.09. Get on up there, baby. Buy a bunch of calls. Make some money if you missed the rug pull this morning. Make some money for daddy boy. Make it for daddy in the morning time. You're also now going to be looking for the 1 minute to catch back up here. And you want to see some kind of a trade down below here. You want to see this get over here in the price. Next trade is somewhere in there. See if we can squeeze it higher now. Making some money. None of you folks out there should ever be doing this. This is a video game. You have your paper and pens out, not financial advice.
Pro-Ukrainian group
Do not trade real money. Just get a piece of paper and a pen and write it down on your side or whatever the hell it is you do. You bunch of weirdos out there. Not financial advice. Video games, boys and girls. I sold some 404s and I also grabbed some 405s. So now I'm just on 405s. And there was a good rip here on 404. So if I need to, I grab some 404. I had 405s down here. I had 405s like right here and took the money. And then we came back down and I bought some 405s. They're cheap now. They're like 48 cents or something. So if we can come back down and I'll grab, if I can grab some more 405s over here and try to grab this thing right here to go higher. At least try to reclaim this bullshit up here. There's your volatility for the day, boys and girls. Here's the next trade if it works. I'll set up the next trade for you. On paper, you're not trading this. It's just paper. There's the red line right there. There's the white line right there.
We've posted the full New York Times piece about this on the feed for those interested. So some more color. So these U.S. officials did say, however, that they had no evidence that Zelensky or his top lieutenants were involved in the operation. Just a pro-Ukrainian
right
group
there.
supposedly
Be careful
carrying out
of the
attack
scene
on
of the
Nord Stream
crime right
pipeline
here.
last year.
We're coming into a 4 trigger cluster right now. We have 1, 2, 3, 4 trigger cluster coming up right now. Oh yeah, baby. Come on, 405s, baby. Woohoo! Trading 403. We're actually coming into a cluster right now. I'm going to show you something really quick, okay? 4 trigger cluster is very powerful. Could see a face ripper at some point. Pull back and face ripper. Doesn't matter. It's going to happen here. We've got the 1 minute, the 2 minute, or the 1 minute, the 5 minute, the hourly, and the daily 4 trigger cluster right now on the market. You got put holders making their bank in the opening this morning. Then you got the dip buyers stepping in. Like these videos. Share these videos with your friends. Follow, subscribe. If you're making money, you should be. It shouldn't be too hard to make money in this market. $40339. 40339. Okay, so this is gone. Gonna get rid of that rug puller. That's not there any longer. This is your 4 trigger cluster right here. The daily, the hourly, the 1 minute, the 5 minute. Bulls need to get above this. And even if we come back and check it, it's probably going to set up this monster move higher, a face ripper at some point. So we want to see this come up right here. That's how we stay bullish. If it fails, bloodbath down below, but it looks like we're gonna squeeze here. Just give me a dip to buy down here. I'll be honest with you. Just come back down here so I can add some right here. Just do me a solid. Please do me a solid. Come like right back down here so that there's one more dip buy down here. Come on back down. Come on back down there for me. Don't leave me behind. Never checked stops here. Probably check some stops down here now. Look for stops to get checked right about there. Come on, baby. Let daddy buy some.
Fed's Powell says we have the tools to get inflation down over time. And that they will achieve their 2% inflation goal.
This is where I want to buy some right here. Come on down. Come on down. A little bit lower. Come on down. More. Come on down just a little bit more. A little bit more. Oh, dude, fuck. Oh, yeah, baby. All right, so I just started some. I've got I just got 10 405Cs for 36 cents. Now trading 38 cents. 37 cents. If I have to add more down here, if they can tag this stop, I'd be happy. I want to get one more red bar down here, see if I can add some more, and we'll I don't want to miss this right here. Come on. Put the Senate hearing back on for you.
The very blunt tools that you do have right now with regard to increasing rate increases. Is that a fair statement, sir?
In a sense, it is, but I would just say on energy,
I'm not trying to get you to a policy discussion with what the president's doing on his energy policy. I just want to make it clear that you have to respond to what's in front of you, and it doesn't matter where the inflation is coming from or what's driving it up. You're simply trying to bring it back down to that 2% number with the only tools that you've really got.
Yes, but I will say on energy, energy has tended over.
You don't want to see the 5-minute rolling over here.
And is not
could turn into a barrel
mainly
plane.
Affected by our tools. So the things we look at are really things that are tightly linked to demand in the U.S. economy. Those we can affect.
And I think just the fact that you've been increasing interest rates, and yet inflation continues to ride up, would suggest, just as you've just indicated, that when you have high energy prices, it's tough to impact that part of it with the monetary policy that you've got.
Come on down there.
So we focus on everything, but we also focus on core in particular, which doesn't include energy prices. And what's happened is core inflation has come down, but nowhere near as fast as we might have hoped, and it has a long way to go.
Thank you. One last question. Last June, Vice Chairman of Supervision Michael Barr testified before this committee that he would defend the use of the aggregation method as an alternative approach to the insurance capital standards, the ICS, proposed by the IAIS. As the final compatibility criteria set to come out later this year, can you confirm
this is the daily trigger? You don't want to trade below this. If you do, trade below this.
On this AM.
Tags down below, or targets down below, 399.10
I'll have to get
and
back to you on the status of that.
397.76.
Okay, thank you. Thank you, Mr. Chairman.
Thanks, Senator Menendez.
These bear, let me mute this for a minute here so you can see this. Just be careful here. If you are trying to buy a dip, we have the first bear plane here, and we have the second one developing here. If at any point you see the 5-minute roll, if you ever see a 5-minute roll down here, something like this could get nasty to the downside. So make sure if you are trying to buy a dip down here, that you have stops down below so you don't take a huge L for a bloodbath down below. Very dangerous trade right here. Come on, baby. Hourly trigger is above. I'm going to show you guys this right now on another chart so you can see it. So right now on this chart, we'll get rid of this real quick. So just so you can see right now, we're on the hourly trigger. The 1 minute has come back down. We have a little bit of a roll in the hourly and the 5 minute here. You don't want to see this start to curl down and create velocity to the downside. If we see that, it gets kind of dangerous at some point. Right now, the 5 minutes, not so bad. 1 minute's kind of shitty right now. So I'm not going to call it either way at this moment. It's more like liquidity breaks down below. But I do warn you, if we trade and hold under this hourly, I want you to see this right here. If bears can hold underneath this hourly, it could get really nasty. You're talking about trend change, even if it's for just the rest of the week. Any kind of closure underneath this hourly here or this daily is no bueno for the bulls. Bulls, not good when you see that, okay? So be aware of that as we head into the rest of today. Bears trying to hold us underneath right now, 40191. 40191. Key level here for the bulls, for the bulls to trade back above this number. If they don't get this, not good looking for the bulls if they do this right here. Not good if they stay underneath this daily trigger. And you can see it, put the stops up. They're trying to trigger stops currently right now and get this market to trade lower. Trying to squeeze out right now. Anyone with stops right here. Look at all this trying to squeeze out stops right here. Oh, I gotta add some right here.
Fed's Powell says Congress needs to raise the debt ceiling.
Trying to squeeze out any dip buyers down here right now. Bears want to stay underneath this daily trigger. Very important. Cannot express to you how important it is for bears to stay underneath this yellow line. This is the trend for the market right here.
Consequences would be extraordinarily adverse. Failing to do so, consequences, again, extraordinarily adverse and do long-standing harm.
And also remember, this weekly and monthly trigger that we had down below here on February, we closed this with huge destruction in the market down here in this weekly and monthly trigger. February, we destroyed this into end of month. This is not the biggest support in the market that it once was. There was no repair for the month of March. It repaired itself, or repaired itself a little bit, but not really. We closed the month of February with no repair to the weekly or monthly down below, monthly support levels. Fugazi, baby.
Fed's Powell says the Fed will do what it can to restore price stability while preserving
observers tend
maximum
to
employment.
watch this and tend to think that it will work out, and it has in the past worked out. So
Can't
it needs to
speed
work
this
out
up.
this time too.
Now, seeing your testimony before the committee, is it fair to say that you'll do whatever is necessary to tame inflation?
We serve a dual mandate, and we will do what we can, everything we can to restore price stability while also serving maximum employment.
And primarily that means additional rate increases, would it not? What other tool do you have?
That's what we have. The balance sheet, the shrinkage of the balance sheet will continue
Fed's
too, but it's
Powell says
principally
there could be a
rate
time when
hikes.
our
So the
mandates
question is,
are
when
in
does
conflict.
that
They're referring to
part
inflation
of
and employment.
doing anything necessary to tame inflation, come into conflict with your other mandate of maximum employment?
Not now, when we have the lowest unemployment in 54 years, and where we have a labor market that is extremely tight, extremely. So, but that time could come, but it really isn't now, where we're very far from our price stability mandate, and in effect, the economy is past most estimates of maximum employment.
Thank you, Mr. Chairman.
Thanks, Senator
Maximum, our estimates are beyond max.
Thank you, Mr. Chairman. Chairman Powell, thank you for being here.
That is a nod to
Thank you to you and your team.
the
for helping
unemployment
to
rate
save
now
the
going up.
economy during the pandemic meltdown. For what it's worth, I'm generally supportive of the actions of the Fed right now, and I'm not going to ask you today to blame anybody. When Congress spends money, it stimulates the economy, does it not?
Well, it would depend on whether that's funded by tax increases or not. But so, if there's a spending that's not accompanied by taxes, would have a net at the margin stimulative effect.
Well, and when Congress borrows money to spend even more, that stimulates the economy even more, does it not?
At the margin, yeah.
Okay. If Congress reduced the rate of growth in its spending and reduced the rate of growth in its debt accumulation, it would make your job easier in reducing inflation, would it not?
I don't think fiscal policy right now is a big factor driving inflation at this
I'm
moment.
making money right now. I'm
but it's
actually
absolutely
quite up right now in calls.
We do slow the pace of growth, particularly for
I'm green right now.
All right, let's try to unpack this then. I'm not trying to trick you. You're
Thanks,
raising
Chaz. I appreciate it.
rates. You're raising interest rates to slow the economy, are you not?
Yes, to cool the economy off.
And one of the ways you measure your success, other than fluctuation in gross domestic product, is the
Fed's power
unemployment
says
rate.
we are not trying to raise
Is
the
it not?
unemployment rate.
Yes,
We're trying
one
to
of them.
Yeah, we got
realign
the
supply and
we got the
demand through a
two.
bunch
So
of
in
We got
effect,
the
I'm not being
double. The
critical.
double.
When you're slowing the economy, you're trying to put people out of work. That's your job, is it not?
Not really. We're trying to restore price stability.
No, you're trying to raise
not
the
wages,
you're trying to raise the unemployment rate.
Yep.
There are a lot,
And
so there are a lot of
that mean I know you don't like the phrase, so let me strike it. You're trying to raise the unemployment rate.
Yes, sir.
No, we're not trying to raise it. We're trying to realign supply and demand, which could happen through
Bullshit.
a bunch of channels. Like, for example,
Bullshit.
Just job openings.
All right,
Job
let
openings
me
could.
put it another way, okay? The Economist did a wonderful study.
He's like, you're trying to raise the unemployment rate. Yes,
looked
they are.
At 10 disinflationary periods in America going all the way back to the 1950s. Disinflation is what you're trying to do. It's a slowing in the rate of inflation. Am I right?
This seems like it sets up. I don't know if this guy's
prices
Republican
don't
or
go down,
not.
they just don't go up as fast. Deflation is when prices actually go down. You're trying to achieve disinflation.
Looking pretty bearish
not?
right here. We're getting a rejection off the 1 minute.
Based on history, in the 10 times
This is very bearish
that
right
we've
here.
got
This is a
inflation
pretty
down,
bearish
disinflation
crossover right
since
here.
the 1950s, in order to reduce
Now this one I
inflation
might
by
have to get out of
2%,
here. I'm pretty close to getting
unemployment
stopped
had
out.
to go up 3.6%. Now that's history, is it not?
I don't
my
have the
finger on
numbers
the
in
cell
front
on
of me,
this
but
one.
yes, the standard has been.
I wasn't
that
paying
there have
attention.
been
I was
recessions
watching
and
this guy talk over
downturns
here.
when the Fed has tried
This looks like
to
it's
reduce
setting
Now,
up the.
right now, the
I don't know
current
if he's
inflation rate
Republican or not, but
6.4%, and the current unemployment rate is 3.4%.
when you hear this
Now,
guy
if
talking
history
right
is
now,
right,
it
I'm
sets
not
up
asking
the
you to-
politics for the next election
Again, blame anybody.
to be the
But if history is
counterparty and
right,
say we're not,
unless
we're
you
going to
get
have
some
everybody
help,
employed and everybody's going to get rich.
in order to get
Reminds me
inflation
of the
down from
1980s, believe it or not.
to, let's say, 4.4%, and the unemployment rate is going to have to rise to 7% based on history.
I don't know if this guy's Republican or not, but
Okay? And to get
this is one of
inflation
the
down to
things you should pay attention to
based on history.
in regards to an election cycle. I don't know how old everyone out there is, but
unemployment would
you
have to
should
go to
track the
10.6%.
stock market heading into 1980, and then of course from 80.
I wouldn't.
I think
That's what the
88,
record
right? I
says,
think that was the Reagan years.
I don't think that kind of a number is at all in
I
play
mean,
here.
I know you're reluctant to admit it, and you don't want to get in the middle of a policy dispute. But I think it's undeniable. It's undeniable that the only way we're going to get this sticky inflation down is to attack
They're looking
it
for
on
a
the
pretty big bear
monetary
plane
side,
down
which
here. Be
you're doing,
really careful down here.
and on the fiscal side.
Target
which
down
means
below
Congress has got to
399.12,
reduce the rate of growth of
399.79.
spending and reduce
And
the
we're
rate of
down
growth
below
of
the
debt
daily
accumulation.
candle right, the daily trigger right here. This is not bullish in
I
any
get
way,
that.
shape, or form here.
You don't want to get in the middle.
We
of
also
that,
have the
fine.
previous low at
But the more
451.
we help on the fiscal side,
I'm down a little bit.
the
I don't
fewer
know how much
people
I'm
you're
down. I'm
gonna
looking at
have
them
to
right
put out
now.
of work.
I'm
Isn't
definitely
that a
down
fact?
like 40% of my calls, though. So we'll see if they hold up or not.
Could work out that way.
Sir?
I'm sweating bullets here right
Yes,
now.
sir. Thank you.
Thanks, Senator Kennedy. Senator
One
Reed
good
of Rhode
trade,
Island's
one
recognized.
Thank you very much, Mr. Chairman. Thank you,
Not
Chairman,
so good so
for
far.
being here today. We saw in the wake of COVID the globalized supply chain disrupted significantly, and we're in the process of some.
You know, this reminds me of listening to this Senate hearing. Reminds me of the 80s.
To what extent did that?
Now, I wasn't an
disruptive
adult
supply chain
then.
Contribute to inflation, and to what extent?
Although
will
some of you probably
new
think that I was.
Fed's power says we are seeing.
But I
good
know a
inflation
lot
coming
about
down
that
for some
time
now.
period in our history. I was a young adult later on, and my
initial
father
outbreak
was
of
a
inflation
product
was
of
all
those
about,
years. And you'd
spending on
assume
goods
that
when
that
people
would
couldn't
be
spend on
part of the
services, so goods
conversation.
spending went way
Fed's
up,
power
and
says housing
the
services
global
inflation
supply
coming
chain,
down is
many,
in the
many goods
pipeline
are
for this
imported.
next 6 to
Global
12
supply
months.
chain just collapsed, and that was the source of the original inflation. It
There
now
is an
spread
argument to be made that
over the last
there's
2 years
a
to housing,
fundamental
also
shift
to
in
the rest of the
policy.
services.
Fed's power
So
does
to
say
your
that
question,
core
we are
services
seeing
ex
goods
housing is where the
prices-
challenge
goods
is now.
Inflation has been coming.
I'm going to turn this down for a minute. We've talked about this in the show before, and that would be that in the 50s, 60s, into the 70s, mostly though earlier though, the post-war 50s, 60s, where rather than using modern monetary theory, right, where you're turning the money supply on, basically, right, money sloshing around, that rates were used to limit growth in the economy, limit growth in the stock market, and limit growth. Everyone's employed, stable employment. You'd call it like limited growth, I guess. Maximum employment. Fight inflation, that kind of stuff. And then, of course, in the 1970s, we switched policies, took on massive debt, money sloshing around, as they say, in the economy. And so you've got some kind of, questionability of if the Fed is switching back to that policy. There's reminiscences of this in the 70s, reminiscences of this in the 50s and 60s. And then, of course, you'd have a counterparty that would run against that policy shift. I know that in your mind you probably think the responsible party would opt for going back to that style of a Fed. But the reality is, in politics, they'll take the other side. Both parties will take the other side whenever they can. Yeah, I'm going to get stopped out right now. I'm close. They're trying to get me right now. They are trying. I'm sweating bullets here.
Spouses' wages have been moderating without softening in the labor market.
I got my hands on the trigger. Not bullish. This is not bullish here. Watching us trade and hold underneath the daily trigger here. If the bears can get this closed for the rest of the week under here,
factors affecting inflation, and don't think anyone knows how this is going to play out.
If the bears can get the close under the daily trigger here, you start to turn this into negative, right? You turn from it's only yellow because of the line itself. It's not yellow because it's neutral or anything like that. But if this were to turn in from support into resistance, I'm not going to change it to red here because the line isn't red and never will turn red. Well, I guess we could make it red. That would be kind of cool. If we could actually change this on the tool to red, would be kind of cool. Make it like green and then red, so we know what trend is. I'll have to write that down. Hold on a second here. Give me 1 second here. Oh, uh-oh. I just lost my monitor. Don't fail me now. I almost lost me here. Woo! I almost lost the stream. Hold on a second here. It'd be kind of cool if we could change the daily trigger line to like from yellow, or maybe make it green and red and switch depending if we're trading above or below it to show if we're in bearish or bullish.
Houses, we are going to be looking at inflation in goods and housing and the broader service sector as well.
Now, there's one key point so far that's to be taken away from Chair Powell this morning, and that is the questions to him being, are we at max employment at this time? That is one of the keys. There's two keys that bears are looking for the final plunge in the market. The first one would be that we're at the turning point. Are we at the bottom of? Are we at max employment? Because when that unemployment rate starts to turn higher, we'll find hedge funds and banks will front run that turn higher. The second thing that banks are looking for is the cutting or pausing of rates. Now, if you see historically, forget the 2-year and the inversion curve and all that kind of stuff. Historically, you're looking for two specific things. You're looking for unemployment rate to start to rise, and you're also looking for the cutting of rates and the front running of those two things happening by banks. Oh, shit. Hold on here. All right, I'm out. I'm flat right there. Now, if you see those two things start to show themselves, you will wind up seeing the banks front run that stuff. Sometimes they get it just right. Sometimes they try to front run it. You'll end up seeing it. Sometimes they get it. They nail it, right? But if it's unexpected, if there's an unexpected, if they don't know that the rate cuts are coming, you'll see that roll happen right when they announce them. If they know in advance, they will front run them, historically at least.
$5 billion in 4-week bills on
Now
March
trading
9th,
424, 428. Price target below 399.79, 399.12. Bears fully in control at this moment of the market, fully in control of the daily trigger. Huge moves for the Bears today. Congratulations to the Bears. If the Bears can close underneath 401.99, let me see if I can make sure that's right. 401.88 right now on the daily trigger. I'll post this right here for you. If they can close under this today, it's a huge win. Trend reversal for the Bears. No one on FinTwit said that would happen. Nobody. Nobody. All of FinTwit said trend reversal confirmed. New bull market. Right now, that is not true. As of today, right now, at this moment, there is no bull trend. Zero. We are underneath the daily trigger. 2 reversals currently. We've got the one smashed down below. Next, tagged right on the 5-minute and blasted right down below. All bears have to do now is hold this here and turn it into some form of resistance. If they do, that's it, bulls. You got nothing, man. You got volatility all week. You got volatility on Wednesday. You got volatility on Thursday and Friday ahead for you. Let's see if the Bears can tee off the 1 minute, 401.28, and then they got 402.40 above. Both of these lines, if Bears can just continue to sell off of these two lines right here, will have a day for themselves. Oh, I still have a banner? My bad. Sorry. Hold on a second here. Hold on, I'm not doing my my job in the background. I'm getting yelled at by a producer. He's like, you have to do this and you have to do that. And I'm like, okay. Thank you, producer. I appreciate that. Thankfully, I have producers now. They're taking care of me in the background here. Bears in control as of right now. I don't know how long it lasts, but I'll tell you this. If you're a bear out there, huge. We're going to show you right now what the Bears have in store for themselves. Let me switch over to the trigger here for you. Let me switch over real quick and show it to you. Let me show you the beauty for the Bears. Look at that gorgeousness right there. Break underneath, break down below, trading underneath the 1 minute trigger. As long as they stay here doing this, right? I want to show you this right real quick. If a bear can get the hourly and the 5 minute, watch my cursor right here. They can get the hourly to start turning down. It's 11:03, so they're looking for 11:30. Get the 5 minutes to come back down, get the daily to come back down, the 1 minute to come back down. And if they can get this blast down here, it's all over. Good night for the bulls over here if this happens here. All they need to do is stay in control of this market for the next hour or two, and they will. They will be in charge of this market. Unreal moves in the market. I wonder what FinTwit's doing. I wonder if FinTwit is all bulled up here, all bared out here. What are they? Are they bullish? Are they bullish? I want to know if FinTwit's bullish right now because we are underneath the daily trigger. All they need to do is buy time here. That's it. Buy time into the end of the day. Doesn't even matter what the Senate says. There's nothing J-Paw can say at this point, I think.
That's going to fundamentally change the real estate market on the commercial side. And
2 ultimate targets down below.
Potentially a cliff here of
see if we can
of a totally
put this over here.
in terms of commercial real estate.
We're
How
going
are
to
you
look for
looking at
these
that
into
issue
end of
and
week unless the
recognizing
Bulls
there's
can
lots of
take
bumps
back
coming out of COVID? This
the
one
daily trigger
Fed passes,
above.
however, there
more
are
unique
pockets of
in nature.
concern, including
How are you thinking
upcoming refinancing, and says we are watching that carefully and just seeing the US 2 to 10-year.
Oh, wait a minute, you guys can't see this shit.
Reaches 1 percentage point.
Sideways as a percent of GDP, so you don't see
Right
you
here.
don't see a big spike going on.
Huge here for the this right here is all the Bulls need, or the Bears need to hold is right there. We'll just make it red.
You pointed to
That's what the Bears need to hold right there.
the
Boom.
refinancing spike.
That's all they need to hold right
I've
there.
Seen those come and go before.
As long as they hold that, as long as they hold the daily
maybe
trigger,
at a much higher rate this time. But
it's
something
Bear
that
Town,
we're
baby.
Well aware of and watching carefully. In terms of CRE, I would agree with
Fed's
you.
Powell says most big banks, though, don't have a lot of exposure to commercial real estate.
Yeah, thanks, man. Dude, I got producers. They're the balls. I love producers.
Wonder how that can be. Now, over time, some of that's going to be made into condominiums and things like that, since we don't seem to have.
Fed's Powell says we carefully monitor small and medium-sized banks.
But the question is, what's
exposure to commercial real estate?
It's not.
I just sent you a text.
The largest institutions don't tend to have a lot of direct exposure to that. Some smaller banks actually.
Let's see if the Bears can tee off on the 1 minute. 401.22 and 402.28 for the Bears to tee off now.
There's a lot of monitoring, and I'd say we're on the case. So,
well, that will morph me into my last question. Something we've talked about, and a lot of my colleagues have talked about with large institutions. In other words, I mean, I do think even some of the biggest critics of Dodd-Frank, I think, would acknowledge our banking system is.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Here, I'll read the. I just read a comment. Let me read the comments real quick, guys. I wasn't reading any comments there.
Beyond the regulatory perimeter. You know, the fact that we
Vic's looking prime. The prop daily options have turned the option market into a casino. It was too easy, guys. A simple reject off the JPM collar top strike trading above for weeks. What else we got here? It's over. Here comes 4,000 support. Let me refresh the chat because I'm missing some of you guys are saying. Sometimes my chat doesn't catch up to real time.
I'd like you to talk generally in the last 40 seconds or so of.
Here, let me go back and look at the actual chat.
Perimeter. I'm a big believer, and I know some of my colleagues are, that that we ought to look less at charter and look at same risk, same regulation, maybe as a guiding principle. And I know Senator Warren's been working on some work. I've been working on some work.
Let's see if I can find the. I got to go directly to the chat here.
A vast amount of activity that's taking place outside the regulatory perimeter. How should we be thinking about that, and how do we make sure that doesn't create the kind of crisis sneak up that happened in 2008 on
Fed's
the
Powell says same activity and same regulation.
Oh, dude, Joe Donut's in the chat. Right on, brother. How are you?
I support for crypto and other areas of concern. So just repeat there, same activity and same regulation is a basic principle I support for crypto and other areas of
money
concern.
market fund, that it has the same regulation as a money market fund or a bank deposit, and so stable coins need some attention in that respect. I just think that's the basic principle. And you're right. So much of intermediation has moved away from the regulated banks, really, for a long period.
Yeah, how you doing, Joey?
We got to keep an eye on that.
Thank you, Chair Powell. We can keep looking.
Hack the Planet said growl.
Senator Haggerty of Tennessee.
Thank you, Chairman.
See what some of you guys are saying.
Thank
See
you
what
very
you guys
much, Ranking
are
Member
saying here.
Scott, for holding this hearing. Chairman, it's great to see you again here. I appreciate your presence, and I appreciate the opportunity to talk with you about an item that I'm particularly concerned about, and that's the holistic review that Senator Britt just brought up, that Vice Chair
Let me read some of these comments aren't coming through in chat here. I've got like a lag on my main dashboard here.
And as I think about that in the context of
So I have to go through separate chats here.
You think about the situation in 2020 was
tight
an
here.
acute real-life stress test, if you will. And I think that our financial system navigated that admirably. In the past, Chair Powell, you've told this committee that our financial system has proven resilient through 2020, and that the capital levels.
Oh, do you want the?
Levels are at multi-decade highs.
Let's see what you guys are saying here. All right, now I got the chat back up.
Prior statements and see if you still feel that way.
Chase says, fuck SG. They keep psyching me
in our
out.
System, we have a vice chair for supervision.
MMT, 15-minute Jim is super bearish. Yeah, I'm bearish here, definitely.
Supervision comes in, take a fresh
I'm bearish unless we get above the 1 minute here. So what's happening right now?
Did, and that's
What's happening right now is they pinged off the 5-minute. They're trying to ping off the 1 minute right now until price gets above the 1 and 5. So if you want to get bullish here,
make recommendations on regulation.
If you want to get bullish here, you need to see the 5-minute turn back up, and you want to see the 1 minute turn back up right here, and you want to see price retest it and get above here. So right here is what you're looking for a retest, and then you'll get the trade higher. But until you see that right there, stay out of this kind of nonsense mess and wait for this one right here. I'll take along with you right in here.
Chinese Foreign Minister Qin Gang warned Tuesday that Beijing
Bear music, please.
headed for conflict and confrontation. If the US
Lions
doesn't
family
change
rooting for
course,
the Bears now. Nice.
tone,
Oh, you want the bear
Someone
music?
relations between the rivals are at
Bear's gonna
so
drop the
slow.
ball.
The Fed passes the Fed is very strongly committed to tailoring regulations for banks.
And again, I realize that the details of the study haven't been finalized.
Entry on fake breakdown would be 4017. Some positive divergences. Watching for a long. Confirmation will be a break above 20. Wait till the afternoon conversation starts and we see if bears can take out bulls. Hedge come off, market after mean. Yeah, I agree with that. So Justin Guy, I agree with you on that.
I would say we're, as an institution, very strongly committed
Sloth says he's down $75,000.
Anything we do is going to reflect.
You'll see it right here. If you see it, if you want to look for the trade higher, you'll see it right here. You'll see this trade higher. You'll see this one turn around
the legislative intent
right here, and you'll see price come above, retest it, and hold it. If it doesn't, if price stays below, that's another bear plane
in terms of keeping
forming right there.
I'd like to come with my next question, Chairman Powell, with starting the question by underscoring the importance of the independence.
All right, I'm back to, I think I can hear, I think I can see, I'm going to turn off this now so I can, I think I've got your chat back up and running with,
private sector who are in the midst of planning layoffs and forecasting serious economic weakness in the quarters to come. Yet, on the other hand,
I could have sworn I was the only one bearish on FinFed. I don't think anyone else was bearish. Matter of fact, I got a text here from someone that said, "You're the only one bearish." Let me see what I got told. I got laughed at actually.
So
let me read it. What he said to me.
Last year, we saw
not going to name names.
Very promising, modest increase.
We are not bearish anymore. LOL.
December.
That's from one of the people you all follow out there that told you that he was bullish. It's a nice tweet.
Strong reading on inflation in January. Also very strong jobs reading. Also very strong retail sales.
Bears looking for a previous low at 399.12 going back.
We're looking at.
That says we have more to go.
What we thought we were seeing
to March 3rd right here. March 3rd, previous low and gaps to fulfill down below at 398.41. You can see them right here.
In the pipeline. There's not a lot of
all of it given back
in the largest sector,
and then going even farther back.
So we inflation's.
What do we have down below down here? 391.01.
I think nothing about the data.
All of it,
that we've
giving it all back right there.
Suggests that we still have work to do.
Bears get the close underneath.
Thinking about where the tightening goes and when it might.
Fed's Powell says data
boom,
so far suggests we'll
boom, back in downtrend, and then man, right there, 391. 392. That's how it happens to the Bears if they can get it. All they need to do is close under this, and this is all theirs. Opened all up for the rest of the week, believe it or not. Now I don't know if they close this down here, but if you're a bear, that's what you want. You want this close right here. You want this close underneath right here. Huge for Bears if they get that.
We still have significant data to see before the meeting. Suggests that the ultimate rate that we write down may well be higher.
Teeing off on the 1 minute right now.
Got it. Thank you, Mr. Chairman.
It's 11:13. They've got 17 minutes for new lows in the market. 17 minutes for Bears.
Thank you, Mr. Chairman. So the Fed has raised interest rates 8 times over the last year in what has been the most extreme rate hike cycle in 40 years. The Fed's goal is to slow inflation, and your tool, raising interest rates, is designed to slow the economy and throw people out of work. So far, you haven't tipped the economy into recession, but you haven't brought inflation under control either. And
we know who that is.
Maybe the reason for that is that other things are also keeping prices high, things you can't fix with high interest rates. Things like price gouging and supply chain kinks and a war in Ukraine. but you are determined to continue to raise interest rates. So I want to take a look at where you're headed. In December, the Fed released its projections on the state of the economy under your monetary policy plan. According to the Fed's own report, if you continue raising interest rates as you plan, unemployment will be 4.6% by the end of the year, more than a full point higher than it is today. Chair Powell, if you hit your projections, do you know how many people who are currently working, going about their lives, will lose their jobs?
I don't have that number in front of me. I will say it's not an
just
intended consequence. It's
well,
not,
but it is, and it's in your report, and that would be about 2 million people who would lose their jobs, people who are working right now, making their mortgages. So, Chair Powell, if you could speak directly to the 2 million hardworking people who have decent jobs today, who you're planning to get fired over the next year, what would you say to them? How would you explain your view that they need to lose their jobs?
I would explain to people more broadly that inflation is extremely high and it's hurting the working people of this country badly. All of them, not just 2 million of them, but all of them are suffering under high inflation, and we are taking the only measures we have to bring inflation down.
And putting 2 million people out of work is just part of the cost, and they just have to bear it?
Will working people be better off if we just walk away from our jobs and inflation remains 5-6%?
Let me ask you about what happens if you do this. Since the end of World War II, there have been 12 times in which the unemployment rate has increased
World War II,
by
baby.
1 percentage point within 1 year. Exactly what you're aiming to do right now. How many of those times
nice 1%
did
down
the US
move on the day
economy avoid falling into a recession?
You know, it's not as black and white as very
Just
very
looking at
infrequent.
the numbers, it actually is pretty black
Alan
and white.
Blinder's written a book on this, and
There have been 12 times.
14 minutes left for the Bears to get a new low.
Increase in the unemployment rate in a year. That's exactly what your Fed report has put out as the projection and the plan based on how you're going to keep raising these interest rates. How many times did the economy fail to fall into a recession after doing that? Out of 12 times.
It's like 1 point. It's like 1%. 1 point.
That's exactly right.
Let me see if I measure that again.
Then the question becomes: we've got 2 million people out of work. Can you stop it?
Yeah, it's like
people. History suggests
1.01% on this low right here, this 422. 1% move down, 1.01%.
Once the economy starts shedding jobs, it's kind of like a runaway train. It is really hard to stop. In fact, in
12 minutes left for the Bears to get a new low.
That the
they can't get a new low off this 1 minute, so I want you guys to see this from the Bears side. When you trade this 1 minute here, they have to get a new low. If they don't get the new low, it shows weakness in the bear move lower. So see the new, there's no new low right here. So the next 12 minutes, if you don't see one, down move over.
If you reach your goal and 2 million people get laid off,
12 minutes left for the Bears to get a new low. If they can't get the new low, this is it. That is bottom.
Just like in 11 out of 12 times that unemployment has risen
12
by
minutes
a
left
point
for
in a
Bears.
single year, it keeps
Fed's Powell
on
again
rising.
repeating, we are not
And then we've got
targeting a
2.5
higher
million
unemployment rate.
people out of work. We've got 3 million people who get laid off. We've got 3.5 million people who get
Fed's
laid
Powell
off.
says a
What's your
4.5% unemployment rate is still well
right now,
better
the
than most
unemployment rate
times
is
historically.
3.4%, which is the lowest in 54 years. And we actually don't think that we need to see a sharp or enormous increase in unemployment to get inflation under control.
I'm looking at your projections. Do you call laying off 2 million people this year not a sharp increase in
I would say
unemployment?
4.5%.
You guys realize this is an argument about modern monetary theory, right? Under the surface. You guys all get that? You guys all understand what they're doing right here?
4.5% unemployment.
Talking about using
is
rates
well better
to
than
limit
most of the time
growth.
for the last, 75 years.
In other words, you don't have a plan to stop a runaway train if it
Fundamental
occurs.
change in policy.
You are gambling with
Permanent
people's
fundamental
lives,
change in
And
policy.
there's a pile of data showing that price gouging and supply chain
We
kinks
know
and
that
war in
we
Ukraine
know
are
that we're
driving
too
up
greedy to
prices.
allow that.
You cling to the idea that there's only one
This is looking like a bottoming
lay
here.
off millions
No
of
new
workers.
high, no
You
new
need
low
a
right
Fed
now.
that will fight for families. And if you're not gonna
400.22.
lead that charge,
This
you
looks
need
like
someone
bottom
at
at the
Fed
moment.
that will.
It's getting close. We've got 11 minutes left for Bears to get a new low. They want to get a quick reversal this last 10 minutes. They want to get a new low down here. If they can't get it, it's going to reverse and go higher from here.
So I might as well ask it. So to give some context here, my family comes from Appalachia. Particularly, my grandparents grew up in southeastern Kentucky.
Now, do I believe that we're going to have that monetary that change in policy? I don't. I don't think that I think we're too greedy now. So I don't buy it for a minute. I think someone will run against it, and you'll see us go right back. It's funny. I was reading a story this morning before the
coal in Central Appalachia. That
I was reading a story this morning before the before we opened up this morning, and some smart guy said, you know, what they have to do is let people accept 5% inflation for a soft landing. And I was like, that's what they're going to do. I'm like, as time passes, we used to talk in this program all the time that as time passes, that you would see, they want time to pass so that you accept some inflation as permanent. And we see that every decade or two for the scam to go on, for the fraud to continue. That's what they want to do. So as you begin to accept higher prices, you'll see just a reversion back to what we've always done, right? So this is a fundamental argument, at least publicly in this hearing, about do we revert back to 1950s, 1960s, or do we turn the cocaine back on, the cocaine that we know that's been in the market since the 1970s?
Now, I know the strong dollar is sort of a sacred cow of the Washington consensus, but when I survey the American economy and I see our mass consumption,
yeah, she needs to get reelected. I agree.
On the one hand, and our hollowed-out industrial base on the other hand, I wonder if the reserve currency status also.
The Bears need to get a new low right here. They have to get a new low. Just watch this low right here. They're still be in control if they get a new low. But if they don't get the new low, that's where you'll see the flattening out right now. They have exactly 9 minutes left to get it.
I read recently, and I'm not going to comment on how perfect.
You'll see it. Trust me. In the next 9 minutes, you're either going to see a new low or a reversal.
Trying to ramp up production from 14,000
one or the other.
Artillery shells to 20,000.
We are coming into the hourly right now. It's 11:21. We're looking for 11:30. It's an important marker here for the rest of the day.
And when I look at the American economy, we have a lot of financial engineers and a lot of diversity consultants. We don't have a lot of people making things. And I worry that the reserve currency status and the lack of control we have over our currency is perhaps driving that. I'd love to get your feedback on that. What are the upsides and downsides of the reserve currency?
That's a big question to try to answer.
You have 2 minutes, Chairman Powell, so plenty of time.
I can't even get started on that. So we are the world's reserve currency, of course, and that's because of our democratic institutions. It's because of our control over inflation over many, many, many years.
8 minutes left for the Bears for a new low.
The rule of law in the United States, and those are the things.
Almost there.
Once you're the world's reserve,
pain almost over. We'll see.
Used in all over the world in
so the US dollar index extends gains to 105.38, up 1.07% on the day, and the highest since January the 6th.
By being able to pay for our goods all over the world, pay for everything anywhere in the world, mostly with dollars.
So Fed's Powell says there's no obvious candidate that could replace the dollar as a world reserve currency.
Oh yeah, baby! Look at that, Beartown. Woohoo! You guys want to see that coolness?
The other thing is, it's a very stable equilibrium.
We looked at this the other day, right? There's Beartown right there, and we blasted right up into it. Bam, Beartown. 105.380 right now on the Dixie. Beautiful moves in the Dixie. Does it come down? Nope. Goes right up into Beartown.
It gives us less control over
super bearish up in here. Bears love this right now. Absolutely love seeing that strong dollar.
I'm not sure. So essentially, what we try to control is price stability, and no, it doesn't make it harder for us to.
Beartown.
The United States has a smaller external sector than most large economies.
No new low in the moment. We've got 422. We've got 6 minutes left for the Bears to get a new low. If they don't, we should see a reversal here. They did tag off this 1 minute right here. Tagged off the 1 minute here. Got a new low. Tagged off this 1 minute right here. No new low as of yet. Bears have just a few minutes to at least get one more new low down below. If they don't get that new low, you should see a reversal. You should see the bearishness for the moment end. Oh, just waiting here for the next few minutes to decide if we can take a long. 6 more minutes left.
Thank you, Mr. Chairman. Chairman Powell, thank you for being
6
here.
minutes left. That's it. You'll find out.
I know the Fed is experiencing lots of challenges these days. I've got a couple questions that are just, I think, basic yes or no's, and then some longer questions. Would you agree that changes in the size of corporate profits can be one of the factors that affects the inflation rate?
Yes.
Right. Now, recently, we saw that the Employment Cost Index, which, as you know, measures the growth of wages and benefit costs, grew at roughly 4% on an annualized basis.
Sorry, that weird voice is when I speed it up to get into real time.
Is that right?
That's my recollection, yes.
So if corporate profits were to decline from the extremely high levels.
Now we got to wait. We have to wait 5 minutes and see what happens here.
The 4%
we have to wait for the hourly trigger, or the hourly trigger, but hourly velocity.
Productivity, you would not be able to.
You'll know here in the next 5 minutes if we're still bearish or not.
Wage inflation
Trust me, it's right to the half hour. It'll be right till 11:30. Now we have a new low, super bearish right here. 418 bears in control of the hour right now.
Over the longer term.
New low on the last touch on the 1 minute.
So over the shorter term,
417.
That would not be a justification in and of itself for raising rates. Is that right? In the short term,
with 4 minutes to spare.
So I think wages affect prices and prices affect wages. I think we do think.
Remember this daily trigger above. Remember this red is actually the yellow bar on the day. Bears just need to close this red bar above on the day, and we'll be bearish for the rest of the week.
Are you saying that simply looking at the current 4%?
You got it. You got your new low.
Term is an excuse for jacking up.
You got your new low. That's bearish.
I think what I would say is that the overall,
even if we squeeze, that's bearish. You're good.
In the labor market,
you got your new low. Congratulations.
Not just that measure of wages, but others, also unemployment, also participation, also job openings and quits and things like that. All of that, you put that in.
Yeah, I'm not buying any of this. I don't trust this at all.
And I think you see a labor.
So here's what I'm looking at now, right? So I'm not going to buy this dip here. I am going to wait to see if the 1 minute can trade above and price can get above the 5 minute here. If we can get this, I'll take a trade on a rejection or a retest to go higher. But until I see some kind of something like this, as a matter of fact, probably above 402, I'm not willing to take a long here.
Their employees, and if you actually
and says when that gets fixed, corporate profit margins will come down.
Higher wage increase without violating.
I'm afraid of them teeing off right on this 401.66.
Yes, I mean, when I hear profit margins, what we're seeing in the economy is pretty much about shortages and supply chain blockages. And
yeah, you got it. Bears got it.
Product, what happens, and there's a lot of demand. Which
they got the new low, man. Heading right into the last end of the hour.
And shortages are alleviated. You will see inflation coming down. You'll see margins coming down, and that will certainly help with inflation.
Right, but profits are the margin, right? They're going up beyond what they were.
Yeah, you might get a bounce there. You could possibly get a bounce to 401.66, but definitely risky to take anything longer than this 401.63 here.
Contributor to inflation, as you indicated.
I have no interest in this. None.
Ask you about the tight labor market because
I need to see a failure of new. Every time there's 2 things I'm looking for now. So at least for me, for my rules, I'm looking for no new low on every touch of the 1 minute. No new low. Then I'm looking for for the next hour, no new low off the touch of the 5 minute. If I don't see either of these, in my view, we're still bearish here, 100%.
Those 2 factors, affordable child care and immigration, more legal immigration.
And you'll see this reinteraction right here off the 1 minute. Now we're trading down to even new lows.
So on the first,
now trading 415, 414, 400 with a gap to 07.
That shows that it helps keep women in the workforce when there's child care available, which is, I think, kind of self-evident. The second was impact.
So someone just loaded up calls somewhere and is getting stopped out probably.
Dow Jones down 1%.
As part of the
403 trading right now.
Of labor statistics report, which comes
not what bulls want to see here in any way, shape, or form. Remember that S3 is right here.
The Census Department has increased its estimate of the workforce by something like 870,000.
Let's pass as more immigration may be in part what's alleviating some labor.
Previous low going back March 3rd right here at 399.12. Now March 7th, all gains erased over a day and a half, 2 days I guess, right, day and a half.
In the labor market that
to March 3rd.
Labor shortage pressures that we were
Bears want to get a new low below this 399.12. They can just touch it, with the PP down here.
Clearly, the economy's calling for
make the algos happy.
Essentially 2 job openings for every unemployed person, and this can be a source of those people.
Right.
402.02
and reduce pressures on inflation. Right.
May already be doing so.
Thank you.
Senator Kramer of North Dakota is recognized.
Thank you, Mr. Chairman. Thank you, Chairman Powell, for being here. And I can't resist responding to a few things that my friends on the left have said. For example, in his opening statement, Chairman Brown had a long list of things that raising interest rates won't do. Raising interest rates won't fill in the blank. I'm going to fill in the blank with a couple things. How about raising interest rates won't stop Senate Democrats and President Biden from overtaxing, overspending, overborrowing, overregulating? Chairman Brown said...
Can you guys hear the C-SPAN stuff, or in the background? Is that a good level for you, or should it go higher? The volume of the broadcast there.
But how about regulatory greed contributing...
Good level? Thanks.
Greed? How do you expect corporations to reinvest money if you overregulate their ability to invest that money right here in the United States of America? You want to onshore some things? How about energy policy?
You can hear it?
How about instead of looking to Venezuela or Iran...
Can you hear my voice louder than the guy speaking?
Or rather than looking to China for electric vehicles and chips and solar panels, how about we have a strategy that onshores those things by reducing...
I was the only guy fucking bearish. I'm like the only one that was bearish this shit.
Reinvest their profits rather
like
than,
everyone was super bullish.
Stock buybacks or
Bulls super bullish. The whole narrative has changed right now. I don't know how long it lasts. But I can assure you of this. If you're a bull out there, you are below daily trend as of right now. So I don't know if the Bears are just going to do a bear dance for a day or a half a day, but I'll tell you what. I'll tell you what, man, when we're underneath the daily, when we're underneath the daily down here, this is it right here. This is the bullish above. This is the bottom of the bullish above. This is the bottom for bears, bearish below. This is the start of bears or bearishness in the market for trend. This is pretty big for the bears right now. They must be. I'm assuming that they're. Woo! Should I break out the disco ball?
I warn you again.
Should I give the Bears a win today? Do they need a win?
You're going to advise us on policy. Be consistent with it. Now, I want to get back to the greening of the Federal Reserve and these. I call them stress tests. You can call them whatever.
Oh yeah, Bears.
Now the Federal Reserve
do Bears want to claim a W for the day?
Maybe it's slightly at first about climate stress testing. I just want to ask you this: if we're going to go down that path,
I've got my sailing cleat over here.
The federal climate
Who wants some? Who wants to I don't want to hear this guy talking right now. Do you? Who wants to hear that guy talking? I don't want to hear that guy blabbing his mouth now. Right? I want to hear him. Let's see if we can. Let's see if we can turn some jams on for 5 minutes and give a little bit of a win, a little bit of a W. I'm a bull, so bear with me here. But I want to give a little shout out to the Bears for today. Congratulations to the Bears. We've got I got a little something special for you if you're a bear out there. Hold on here, I got a little something special for you. I know the Bears like this. I know the Bears like a certain jam, and we'll try to give the Bears a certain jam here. Oh yeah, there it is, right there. Is this it? Well, I don't know if that's it. I don't think that's it. No, I don't think that's it.
Fed's Powell says climate scenarios are something banks are already doing
Hold on
themselves,
here.
and they want guidance.
Let's see if I can get it. Oh, there it is right there. Let's pop that track in. Congratulations to all the bears out there that didn't lose faith. You traded the market down below the daily trigger. If you're a bear, congratulations. All these bulls on parade out there, they're thinking that they had it. They're like, woo, new trend, baby. Not happening today for the bulls. Crushing for the bulls. Not quite in defeat yet. The bears need to defend the daily trigger. But if they can't defend the daily trigger, the bears are on it currently. We want some more blood in this market. Let's get that red blood out there and see if we can get it for the end of the day here and just make it rain. Want that little bit of raining blood, that little bloodbath. Can they get it today? I don't know. But you know they want puddles of blood in the market. I don't think they get it, but they're going to try for it. Congrats to the Bears. New low on their last test of the 1 minute. But Bears can retest 445, and they still can retest 401.43 and hold this market down. If you're a bear, congratulations. Yeah, there we go. Bull capitulation, baby. Feels good, don't it? All that cheering. All that new bull market. Mike Wilson, outstanding indicator. Turns bullish and they just throw it right down on you. We spin it the other way for a few minutes while the rest of that song plays. It's almost over. The song's almost over. We got 10 seconds left, bulls. Relax. All right, there we go. There's your bull, or there's your bear dance right there. There it is for the Bears. They got their time in the show today. We have to give equal time to everybody. All right, hold on here. I gotta pull that thing back out of the scene. It's weird. I need to get I need to get a motorized pulley for that thing. I gotta go around my garage and dig out like an old motor with a pulley system. And like I gotta order like an industrial sized belt or something and lower and raise that thing. Like an old Goonies mechanical operation or something like that. If I have a long weekend, I gotta probably do that. Okay, so right now we're on the 1 minute. Right now, Bears want to hold the 1 minute for a new low. If they don't, it's currently 11:37, and they've got the 5 minute trigger above. Even if they trade above to this 401.40, they're still in control right now. Even if we could trade higher here, for bulls to take a trade higher here, they have to see. I assure you of this, that where we are right now, we're not done. Okay. If they can get it, they can get down here and get this new low at just below 399.12, and then also we can trade it higher here and squeeze to 401, and they're still in control. For bulls to get in control here,
in case we have over tightened.
I missed what he just said.
Says we need to continue to tighten. I'm very mindful of lags.
So Powell saying you have to continue to tighten. Okay. Trying to say that we're not going to crash the market right now?
I don't think we need a significant increase in the unemployment rate. So just to repeat there. Fed's Powell does say, but we will need a softening in the labour market to get to 2% inflation.
Oh, now he's admitting it. Bulls, you need to get the test of the 1 minute above the 5. Take any kind of a move higher here. Anything else in here is danger zone. Squeeze higher, rejection, right? Don't want to get caught in that rejection. You can take that trade right there. Good money. But any kind of like faith that this holds, not until it trades above the 5 and the 1 and tests that 1 and 5 minute. That's where you get a test saying that a reversal is confirmed. Until that happens, Beartown, baby. What is the 10-year yield? We go over it in tons of previous videos. I'll try to... I haven't cut that out. Oh, no. You know, I have that video, but I don't think that I've posted it anywhere. I think I said I would, and I haven't. But I have a whole entire video on the yield curve inversion and unemployment and Fed funds rate. I'll try to find the date that was from and direct you towards it. I did it at the end of a show last week sometime, I believe. Spent the last an extra half hour going over again for new viewers. The 2s and 10s, baby. 2s and 10s. They're like Technique 1200s.
The German Chancellery says the federal government has taken note of the latest report by the New York Times on Nord Stream pipeline sabotage.
I gotta start. I gotta do my morning thing over here. Give me a second here. Oh yeah, baby. Look at that. Dixie's still up. Dixie's still pumping away.
The German Chancellery says a few days ago, Sweden, Denmark, and Germany informed the UN Security Council that investigations are ongoing and there are still no results.
New low right now on the SPY, trading 399.90. Teeing right off that 1 minute. Now 399.99. Underneath 400 for a moment. Everybody's favorite level, 400 on the SPY. Woo! That ball is still spinning even though you can't see it in the camera. No, news is still on. Can you not hear the news? Or do you want to hear the actual... here you go.
Spending here in Washington, but the cumulative deficits during the 10-year window will exceed $20 trillion. The cumulative deficit, I'm talking the debt, because it's going to grow the total federal debt to more than $51 trillion by 2033. Now, 2033 used to sound like a long ways away. We're 10 years away. 10 years goes by very, very quickly. Within 5 years, we're going to spend more on annual interest
Miro's losing it on Twitter.
than we spend on national defense. Think about that for a moment.
I have not been on Twitter.
And these are coming
I
out of
spent
the
last
CBO.
night. I haven't been on Twitter a lot.
Shocking.
I've been like so. I spent last night recording videos for you guys. Recording videos.
When,
spent a ton of time on the website, the new website that's coming out.
Economic advisor to President Obama. He
A small amount of time in some meetings with a developer,
warning my colleagues
and
across
then
the aisles, you can't move forward with these purely partisan. You know, that type of
spent some
$1.9
time trying to
trillion
find
extravaganza.
someone
We had $1
to make
trillion
recorded
spent
videos
COVID
for
money
us.
in December of 2020.
We're looking for someone that's willing to do nighttime recap videos.
Ignite the inflation fires. So I certainly hope the president's
I worked
budget, which we
until,
expect
do you
to
want to know
see
the
later this
truth?
week,
I
will
worked until
propose
4 a.m.
growth
last night.
policies that can get us out of this.
Worked until
mess
4
and
a.m. and then I slept from 4 until 8.
almost an existential
4
crisis.
hours of
We
sleep
look like
last
we're
night.
gonna come at
But I
us here
did not
with
out in a
10 years of
chair
debt and service on that
from
debt.
7:30 to
Unfortunately,
8:30, I
as the
think,
president said
somewhere in
the State
there.
Union address, the president says he's going to raise taxes. That's a recipe for disaster.
So I haven't been on Twitter. I just haven't the time.
Productivity, discourage investment,
Like I get on there and then I get off and then I get on there and then I get off. Try to get on there when I can, but the past week or two, or well, past 4 weeks have been really hard. But this past week specifically,
to combat
it's been brutal.
inflation.
So I haven't been on as much as I want to.
Over the past few years. Is that correct?
Squeezing higher now, 471.
And although this is the domain of Treasury, a higher Fed's fund rate will mean higher borrowing costs. Is that correct?
Yes, all else equal.
So I just want to connect the dots.
Yeah,
here
I'm getting
around
about 4 hours of sleep right now. I'm not sleeping at all.
One of the big reasons was
Actually, someone in this program was on with me late last night as I was trying to record some stuff for you guys.
Debt service over the course of
and using my, we're trying to push out to
defense spending, which is we see the threats of China,
like TikTok, and then lead them back to YouTube and Twitch and stuff like that.
A grandfather of 4,
and
5 grandchildren. This is things you think about more and more as you look.
I was working on buttons last night.
Change here and talk about American energy.
Sections and buttons.
Ukraine broke out.
Trying to keep a free option for everybody so that
inflation to spike.
You can weave your way through all of this and make your way around with a free option for any long-time followers and stuff like that.
As of late last
so it's a challenge to try to weave your way through all of that stuff.
More liquefied natural gas.
This is expensive. It's like some of this stuff is like
Russian producers. That's a good thing.
Tens of thousands of dollars every month to put out. So it's costly. It's going to cost a lot of money.
Do you believe that European and American inflation would have been manageable if not for American energy producers?
I certainly think that particularly our natural gas assets have helped Europe make the transition.
Any sense of how much worse the global energy picture would be if you would imagine a world where we're not producing and shipping energy to other countries?
It'd be hard to estimate.
Probably worse.
Yeah, I mean, I think it's been clearly Europe has managed better than expected, and a part of that story is just U.S. energy experts. Also, the winter wasn't as bad, and the Germans made some good decisions.
Yeah, we made some prayers that says we need to pray for a warm winter for Europe.
Oil futures continue fall. U.S. and Brent crude down by more than $2 a barrel.
Send this back over to Senator Cortez Masto.
Let me take a look around the market and see what's going on. I'm going to look at Dixie real quick in the background here.
Always appreciate you.
I'm going to look on the 1 minute.
Talk with us here on the committee. I want to first align myself with the
Dixie now trading below the 1 minute. If it can hold, we might make a move higher. We've got Dixie trading below the 1 minute trigger. We can see if we can get Dixie down to 105.13. I'm going to check HYG right now next.
And I know there are many strong
HYG now trading above the 1 minute. HYG trading above 74.38. It needs to trade above 74.45, and 74.53 will give you the squeeze.
So many of us across the country, including in
Nevada. So I'm going to switch over right now for you to the trigger.
It's about making sure.
Just so you can see this is HYG. You'll see HYG now trading above its 1 minute, 74.38. It needs to hold, though. I want you to watch my cursor right here. See how we squeezed higher and rejected? This is important here if you're a bull. See that here? Rejected down below, rejected down below. Bulls need to get above 74.45 right here. And they need to get above 74.50-ish to say it's all over. So just pay attention to HYG. This is kind of key for bulls in here. And then we're going to look at Dixie right now next.
Federal Reserve economists and leaders think about the balance between keeping interest rates low to spur that affordable home building.
So you got Dixie trading underneath the 1 minute right now, 105.349. We want to see Dixie trade down to 105.37 and 105.05. Now, pay attention to this Dixie here.
And of course,
right, it needs to get underneath here, and you don't get out of Beartown. That's that red box right here I showed you earlier from the 30-minute chart. This red box right here, anything above this is Beartown. This is all Beartown up here.
That's not a choice that we make.
So until you trade underneath this line right here, you don't start getting bullish again, which currently stands at
we don't really try to use our tools
105 and some change, 105.05, something like that. That's a big number right there, 105. If you're a bull, you don't like anything above 105 right now at all.
Try to achieve your statutory goal. Is that?
Yes.
Yeah.
Yes.
We're going to look at the VIX next.
Have you have the opportunity to address Senator Warren's
Nice.
Fed's power says
conversation
I
with
still
you
think we
earlier
can reduce job
about,
openings
the
without
tools
seeing a
that you
big
have and the
increase in
impact that it
layoffs.
has on
Looking like
Fed's
VIX
power
is
says a
rolling
long
over
way
here
from
in the
a
1,
recession
the
based on
hour,
labor
and the
market.
5 minute. Look for a
obviously
squeeze
has an
here.
impact on their ability
If
to
we
afford
can,
homes
if the
as
VIX
well.
can stay
Address
under
that.
Fed's power says I
1890,
don't think they will.
the
to be
roll
clear
might be
that
over
we
here at this
do not
point.
seek
Okay,
a
so
really
you just want to
significant
see.
downturn. So just
we need
repeat
to
that
have
Fed's power says I
a
don't
very
think there will
Here, I'll
need to
show it
be
to you right
a
here.
really
in the labor
significant
market.
downturn.
You want this
And
white line
it's
and this
not
green
just
line to
hope.
come
I
down
think
and
if you look
reject.
at,
So as long as
situation in the labor
price
market, you've
on
got
VIX
all
stays
these job
under
openings, and in
1890,
principle, you could
you
reduce the
should.
job
Now,
openings
it doesn't
without
matter about
seeing
all this
a
stuff here.
really,
Don't worry about this.
significant
You see
increase in
price bounce
This
employment.
around
stream
in
is
here.
sponsored by
Guys, maybe I'll give you a
Pivot.
different price.
Get free daily pivot
It's
I'll give you the
points,
1 minute right
Fibonacci,
now.
and
a
market
long way
profile
away from
levels
anything that looks
by
like
signing
a
up
recession,
at
just looking at the labor
tothetick.com.
market by itself.
Inflation
So
with less significant
honestly,
effects on the labor
we
market
don't
than historically
we don't know
typical.
that we need that there will need to be a
Price
really
needs to stay under
significant, downturn.
1895.
Other business cycles have
1895.
White House's
different,
Kirby says the U.S. seeks competitive relationship with
backstories
China
than
and wants
this
to keep
one.
it to
And
that level.
On the VIX.
We're going to have to find out whether that matters or not. But I do think that I've said all along, and my colleagues
Now
Seven minutes
trade the
away now,
5
figure
minute
the
401
EIA
21 for the
report.
Bears.
we can. There's a path to restoring 2% inflation with less significant effects on the labor market than have typically been seen in downturns.
And for purposes of the general public, the people, Nevadans that I know that are struggling, we have one of the highest, we've talked about this, and thank you for always being willing to talk with me. We have one of the highest unemployment rates in the country. Our service sector was hit so hard. We're still at over 5% just in Southern Nevada. We have high gas prices. We have grocery prices. We have housing prices that are high. So one of the things that you have commented on, and you just did again, but I know it was in your opening remarks, that, and it's quoted right here, and let me just say, you say our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. For the general public, for those working families and people, why 2%? Why is
You can take
getting
a
it to 2%
snapshot of
so
this if you want.
So that has become the globally agreed, essentially all major central banks target 2% inflation in one form or another.
How does that help my
White House's
Nevada
Kirby,
families? How does
when
that
asked
help
about
people in
Chinese
Nevada
foreign
struggling?
minister's comments, says,
it's
I see no
I guess
change in
it's
the
obviously
U.S.-China
not,
relations,
it's
including
not obvious
regarding
how that
Taiwan.
is, but 2% inflation.
This
to
is
have
a
people believe
bull
that inflation's
aeroplane
gonna go
here. If
back
you
to
don't see
2%
this
really
form,
anchors
we're still
inflation
bearish.
Because, the evidence is and the modern belief is that people's expectations about inflation actually have an effect on inflation. If you expect inflation to go up 5%,
Turn the Coke
then it
back
will.
on.
If everyone kind of expects that, because that's what businesses and households will be expecting, and it'll kind of happen because they expect it. So having a 2% inflation goal, which we had for many years, de facto we had it, then we formally adopted it in 2012. But for years before that, we were effectively targeting 2% inflation. And what that meant was that inflation, it's one of the reasons why inflation was low and predictable, is having a real target and sticking to it, not changing it, at convenient moments. So we think it's really important that we do stick to a 2% inflation target and not consider changing it. We're not going to do that. It just is, people will be better off if the whole question of high inflation is just not part of their lives. That's kind of the definition of price stability. It's if people live their lives without having to think about inflation all the time.
Thank you. I notice my time is up. Thank you so much, Senator. Senator Lummis.
Thank you very much, Madam Chairman, and welcome, Chairman Powell. When you're setting these rates and making these decisions and seeking that 2% magic number, are you considering the cost of borrowing for the United
Saudi's
States,
foreign minister says we are
that
committed to
Congress
a stable oil
has
market, and energy minister's views
borrowed,
that it doesn't need
and
production
that we
changes
have
this year, as there's every
overspent,
statement I
and
see that is made
the
on the
national
record
debt
from all of our
is
partners in
at now
OPEC Plus
at least
reflects consensus and
97% of
approach.
GDP, and that we're
Just want to make a note here for anyone that's in this market right now that the Bears, we're back to 11:53. We're on the half hour now. Bears selling off on the 5 minute. They tested the 1 minute down here, got a new low, squeezed higher, traded down, up, and traded off the 5 minute. Now the Bears will have one chance here for the next 6 minutes to hold this 1 minute. If they can hold this 1 minute, they have another 15 minutes to get a new low down below at 399.12.
Sustainable, but the level of debt that we have is not unsustainable, is sustainable, put it that way. So we don't think about interest costs when we make monetary policy. We think about
Fed
maximum
Powell says the
employment
level
and
of the
price
debt
stability.
in the US
It's
is
your
now
opinion
is
that the
sustainable.
level of
And the
debt we
problem
have
is
is
we are on a
sustainable?
path where debt's growing faster
Yes.
than the
I mean,
economy, so unsustainable over the long
have
term.
the
So just
largest
to repeat
economy
that,
in
the
the
level
world.
of
We can
debt the
service
US
this
has
debt.
now is
That's not
sustainable.
the problem. The
problem
problem
is we
is
are on
that
a path where
we're on a
debt is
path
growing
where
faster than the
the debt
economy,
is
so
growing substantially
unsustainable
faster
over the
than the
long term.
economy. And that's kind of by definition, in the long run, unsustainable. And the way countries have gotten or fixed that is with longer-term programs that have bipartisan support and that address the actual problem in the budget. That's really the formula.
Thank you. I'm going to switch to stable coins. You're a member of the President's Working Group on Financial Markets. The working group
So 5
called
minutes
for
away
a
now to the
bank-like
EIA short-term
regulation
energy
of stable
outlook report.
coins in late 2021. Then on January 3rd of this year, in a joint staff statement, the federal banking agencies stated that even after the bank's capital, BSA, AML, and risk management, a bank issuing a stable coin on a, quote, open, public, or decentralized network is highly likely to be inconsistent with safe and sound banking practices. I'm going to say that again. Even after a bank's capital, BSA, AML, and risk management, a bank issuing a stablecoin on an open, public, or decentralized network is highly likely to be
Fed Powell says there
inconsistent
are
with
real
safe and sound
concerns
banking
about
practices.
permissionless
So
blockchains,
I'm a little
and those are
confused
not
about where we're heading on
consistent with
stablecoins.
safety and soundness.
Does the January 3rd statement mean that the Fed has decided that stablecoins on a permissionless distributed ledger have no place in banks?
So I think that there are real concerns about permissionless public blockchains, and the reason is that they've been so susceptible to fraud, to money laundering, and all of those
Yes,
things.
sir.
So I think what you heard from the federal banking agencies in one of their
Fed's Powell says it could
reports
be a
was
place
that
for
they
stable
would,
coins with
would
appropriate
tend to look at those as not
regulation.
consistent with safety and soundness.
And
S3 almost a penny, almost a strike to the penny on S3.
Do you think they could have a place in our banking system?
I certainly think that in a world of appropriate regulation, where the same activity, where stablecoin activity gets the same regulation as comparable products in different places, then there certainly could be a place for stablecoins in our financial services sector.
Fed's Powell says it's important for the US to have a legal framework
UK,
around
Australia,
digital
Switzerland, Singapore, and others have all moved over the last few years to create a legislative framework for digital
Fed's Powell
assets.
does say that's for Congress
The
to
European
do, as it's
Union
not
in
the Fed's role.
particular is attempting to be a standard setter again, like it was with its data protection rule.
Any dip buyers
the
getting
United
torn
States in
up right
danger of
now.
being a rule
Torn
taker,
up right
not
now.
a rule maker when it comes to digital assets?
China's offshore yuan falls
Getting
as
wrecked
five
if you're a dip
important
buyer
for us
here.
to
US
have
dollar.
a workable legal framework around digital activities. I think that is important and something Congress, in principle, needs to do, because we can't really do that.
Yeah, thank you.
Bears still
Senator
fully in
Gillibrand, and
charge,
I agree
trading
with
off
you.
the 1 minute for the new
One
low,
area
come back
we've
up to the
already
5 and
seen,
slam back down for another new
is
low.
in the Basel Committee on Bank Supervision.
Bears did it
they
for the half
proposed
hour.
Prudential treatment for crypto assets framework. setting
12:58,
forth
2 more
banks'
minutes
capital
left. They actually
standards
own
for
the next
digital
half hour as
assets.
well right now.
The Basel Committee's
All they have
framework
to do
does
is come
not
up,
impose a capital
test the
charge
1
for
minute,
digital
and get a
asset
new low.
custody, whereas the SEC's Staff Accounting Bulletin 121 imposes a prohibitive capital charge through the back door and places consumers at risk in bankruptcy. Similarly, the Basel Committee framework allows banks to issue or hold digital assets on their balance sheet if the requisite capital is set aside. So back to January 3rd, 23, the Fed and other bank regulators have said that it is forbidden for a U.S. bank to conduct these activities no matter the capital. So my question is, what does the rest of the world know about digital asset regulation that we do not, that the Fed does not?
So as we discussed, this is an SEC staff accounting bulletin, and it's not something that the Fed issued, and I'd be loath to comment directly on it.
The issue is, and what concerns me, is that the Fed and other federal banking agencies are not following international norms on digital asset regulation. That's just my comment. Thank you, Chairman Powell, for being here.
It's not 400. I want to be clear out here, okay? I want to be clear with everybody out there that, hold on a second, it's not 400.
Chair Powell,
there's no meltdown, I assure you.
Senator Britt and I are the last
100% positively sure that there's no meltdown in the market unless you trade below 395.60. I am positive on this.
And I want to thank you for your
395.60 is the number that a bear is looking for a meltdown.
There's been a good back and forth.
The market bottom currently sits at 395.60. There's two more places that you need to be aware. Like, mark this stuff down, okay? You've got 397.80, and you've got 397.80 and 395.64 on the SPY at least for a market bottom.
During a global pandemic, and in fact,
now you break below that stuff, and we'll start talking about major bloodbaths. But just be careful with the 400. I hear, before, like last week, or remember when the end of month of February, remember end of February where you had, I'm not going to name names, but there were services that you pay a lot of money to that were saying that if we broke 400, it would be ugly, and it was actually 395-ish there too. And it didn't get ugly, right? We traded right underneath it, came right back up like it was no big deal. You need to be closing, not opening, but closing under 395. That's when you get nasty bloodbaths down there.
Put that out.
Closing underneath that number.
And I spoke yesterday briefly.
And I know that there was some companies out there that were spreading that shit, and it was lies, and they know it too, probably. Or I should say allegedly. I alleged. Or I don't allege. I allege that they knew that number was not 400.
Glad to see. It's been about a year since the Fed and the OCC.
It's like 395. I don't know why they keep calling that number. I don't know if it's because they have a short position. Allegedly.
Was perfect by any means.
395 is the 395 that you want to close under on the SPY at least. 395.60 is the closing number to get really bearish, and you have to break through with a bunch of velocity, and then it swings high in the violent move, and then rejects off that number, and then that's the signal for serious down moves ahead. Until you see that 395.60 is kind of like, if you kind of like stick your nose underneath it for a minute, it's bad, but it's not really bad. For really bad, you need to smash through that number violently, reject back off that number, and then start heading lower, and then you have confirmation for 3,300, 3,600, that kind of shit. So you kind of need that. That move. And unless, if you don't see that move, then it doesn't happen.
Climate resiliency were added to the definition of community development activities that would be eligible.
But I know that number is floated. It was floated like 2 weeks ago or something, and by a bunch of services, and I was like, why are they fucking saying this number? It's not the right number. 100% positively sure that's not the number.
The actual costs and challenges that people experience because of climate change.
There's like two major numbers for bears here. Today it's 397.73, 395.64, somewhere in there.
I think it fits for the reasons that you said. Honestly,
that's real support in the market.
A week or so away from getting a briefing on where
the get rid of the gamma, get rid of all the other bullshit that's out there.
Again, I'd rather wait till after I'm fully briefed on where
that's real market support
after the FOMC meeting. So.
Thank you. That's fine. I'll look forward to continuing this conversation with
like where you have like an options market that can move the market 9%. Then you have real money. The other 90%. That shit is right there. 395.
And the reality
395.60.
related action or inaction has
so like the options market can swing us underneath it, but until you get real money selling, that's when the options market doesn't matter.
I was wondering if
that's the real number, 395 and change.
On some of the next steps that the Fed is going to be looking
Sorry,
at.
Gamma Bros, I love you, but
evaluate the resilience of
not you guys that just posted that, but the Gamma Bros that push that narrative. It has to do with Gamma and
started.
You
in
guys see it all the
January.
time. You'll see
Wasn't
Gamma
sure.
Bros.
Curious
It
on how
works
you see
when
next
Gamma
steps
is
there.
actually moving the market. But the moment you get
we're
real
doing
money
really two
buying or real
things.
money
One
selling in the
is,
market,
we
all
are,
that shit goes right out the
doing
window.
a climate
It's just
stress
gone. It has
scenario,
nothing to do with the
which,
market.
the banks are already doing, the large banks, the 6 that we're working with, and that's really just to understand, to begin the process of understanding the risks.
And I agree that Gamma moves the
associated with
market,
this
but
over
only
the
when
longer term.
Gamma's in
Yeah,
charge of the
again, they're
market.
already
The moment
doing
you
it,
see real
it's
buying,
something
real
that,
selling, you
there's a
can
lot
see
of money
those
going
Gamma
on,
models. You can just tear them up
around
and
the
light them
world,
on
actually.
fire.
The other thing we're doing is providing guidance. The banks want clear guidance. They actually want one set of rules globally. The big banks that do business around the world, they're hoping that they aren't in a world where there's just different regulatory regimes everywhere they go. So we're kind of working on that as well.
Great. Thank you very much, Mr. Chair.
Thank you.
Thank you, Senator Smith. Senator Tillis of North Carolina is recognized.
Thank you, Mr. Chairman. Chair Powell, thank you for being here. In your opening statement, I was here for that. I think you touched on some of the interest rate sensitive components of GDP.
I think I'd call Gamma like a tool, but it's not like the tool. I used to think it was the tool. Like I drank the Kool-Aid on that. It's just not true.
Expectations, labor market tightening, et cetera. Can you tell
It
me
works like 70% of the time. It's the 30% where it doesn't work, where you get fucked up pretty badly.
Non-interest rate sensitive readings and whether the Fed
And that other 30% of the time is what?
sort of
Zero
Fed
dates that can't be
actions
tracked
take
by
place to avoid
OI
zero
that's
landing?
recorded at 6 in the morning or
So
9 in the morning,
on,
9:30 in the morning.
The
Right, it's not
housing
accounted
sector
for in the
versus
OI models that are put out there, and then the other part of it is the real money that's sold or bought in this market.
very directly affected
Real
by our
underlying that's
policies almost
bought and
right
sold
away.
and sized
And
by
the
institutional
poster child
movements.
for that is housing, and so
Can't
we've
account for
seen
that
mortgage
in
rates now
in
go
Gamma
up,
models.
back up over 6%. You've seen housing starts come down. Activity in housing has declined as people are reluctant to get out of their the low rate mortgages they had before. So housing activity is slowing down. On the other hand, housing prices went up in the aggregate more than 40% since the beginning of the pandemic. So we may be seeing some price correction on that too. So that's coming along. And housing inflation, which is a big part of the CPI, a little bit smaller part of the PCE, the inflation measures we follow, or we rely on, that will be coming down because of the slowdown in the housing market. I guess I would say the service sector is probably less interest sensitive than that, and that's restaurants, it's travel services, travel and leisure, it's healthcare, it's financial services, healthcare services, all those services, and that's a big part of our economy. This sector is 54%, I guess, 56% of consumer spending.
1 minute, 5 minutes, getting a little bit more bullish, negative velocity, kind of leveling out in the 1 and 5 minute.
A little bit softer.
But the hourly is brutal. Hourly is just starting to get bearish right now. Daily is pretty overly bearish right now, but the hourly is just becoming negative right now.
The chairman.
So we've got, if we're on that hourly, the Bears have 23 minutes,
I don't want to
and they're not. The hourly is not as bearish as it can become. So we'll see how the 1 and 5 play out,
a couple of banking institutions, but
and see if this
how
is
do you
max
feel
pain
about
for the Bulls or
current
not.
capital,
We're
that
close
our
to it. It's
broader
getting there.
banking sector, irrespective of where they are in size.
Could be see another squeeze
What
here up to the
concerns, if
5
any,
minute.
do you have about the capital that we see out there already?
So I supported all of the capital raising that we did. I joined the Fed in 2012, and we were in the middle of implementing all those Dodd-Frank increases.
Oh,
and I
tell them about the
supported all
bank
of
that
them.
you turned bankrupt there, brother.
After careful thought and discussion with my colleagues, I think the new vice chair is doing what new vice chairs do, which is to take a fresh look. And
Tell them
ask
about the bank that you bankrupted.
Even though I think we all agree capital is strong, certainly the vice chair does. The question is it at the right level?
Tell them about the girl yelling who said, "At least we saved the housing market in the GFC."
We don't have any proposals
like 2
yet,
weeks
but,
before.
At some point we will.
Yeah, I'm going to be meeting with the vice chair, and we'll drill down on that topic. But I do know I was over in Finance Committee, so I wasn't here. But I do know that several members. Well, first off, we know that Vice Chair Barr is looking at a holistic review of capital requirements. I think that that's a good idea. But I have to ask a question.
Whenever these people talk, man, I'm like, if any of you are under 30, if you're watching this program, you're under 30 years old,
which is currently the
you
law
watch
of the
enough of
land,
this shit, and like a decade or two later, you're like, these people have no idea what they're talking about.
any
They just
holistic
sound
review
smart.
process. In other words, it is the law of the land. How does
We'll
that
drill
play
down into
how
it and
these
figure it out, I
reviews go?
promise.
So 2155 was.
As soon as we break it,
I think you're talking about
we'll know it.
tailoring. So Dodd-Frank actually called for tailoring, and what 2155 did is it said change may tailor to shall tailor, and it also changed the threshold.
Why do you throw
But
shit on
tailoring
the
is
wall and say we're going to have a
absolutely
soft landing or a hard
bedrock
landing? Well,
aspect
because when it,
of our
depending upon what happens, we can quote those quotes.
system, and anything that we
So that
do
we
is gonna
sound
reflect
smart.
what we think is appropriate tailoring between, you know, the different sizes and risks and of the financial institutions that we
And-
supervise and regulate.
What we were trying to accomplish as a part of that, I don't expect you to respond, I know that we're coming to the end of the hearing, is that a holistic review
S3
of
seems to be
financial
holding right
services
now.
institution is going to reveal the fact that many of these financial institutions are very different based on
21
the
minutes for
activities
for
that they're
Bears to
most,
hold this. They've got the
most
1 minute at
involved in. And those sort of
400.15 tee
holistic
off of,
reviews may actually result
400.83
in
to
increasing
tee off
capital
of.
requirements for two
It's
banks
pretty
that
late
look
in the
like
afternoon
peers,
right now, right?
but not for
12:10 in the
another because of the
afternoon.
inherent risk associated
Some
with their
significant decline
business
in this
focus. Does
market.
that make sense?
This is not healthy to
your
see this.
earlier
If
point,
you
though,
look
the
at this
law,
daily
the
trigger above,
Dodd-Frank
this is what the
language
bulls
as
need to
amended
regain
actually requires that we take
for
those things into
to
consideration.
maintain
So
trend
certainly
above,
will.
right?
We
If
will.
you want to maintain bullishness in this
Senator,
market,
Warnock is
this line
recognized
right
for
here
Thank you
is
so very much, Mr.
trend
Chairman.
for weeks.
Before I begin,
So bulls need to regain this. They need to get above this close above the daily trigger. The more that we stay underneath this daily trigger, it becomes resistance.
It has not
Starts to build velocity to the downside.
it seems to me that the board should reflect the diversity of our nation, that those things are connected. Policy and representation are connected, and I hope that we will see sitting before this committee a nominee that pushes us closer towards our ideals of e pluribus unum out of many.
I bet bulls are like, stop the hearing. We get another day of this too, don't we?
Called for
get another day of hearings.
Specifically, the fact that we've never had a Latino person serve on the Federal Reserve Board, I think it's a huge oversight, and I hope we can move quickly in that direction. That said, my state of Georgia is in a housing crisis. Like much of the country, the Federal Reserve Bank of Atlanta has designated owning a home in Atlanta as unaffordable.
$395. That's your answer. I'll show it to you, and I can show it to you. I can show it to you for 40 years. Right now, it's $395.
Less than 35,000 sitting on the border of Alabama is also rated as unaffordable. In the midst of this housing crisis, the Federal Reserve continues to raise interest rates. This
Well, at
makes
least that's what the
mortgages
hedge
a lot
funds
more
say.
Expensive for families, especially young families looking to buy a house. According to the National Association of Realtors, the share of first-time home buyers
trading 428 right now. Bulls trying to pull it out right now on the half hour. Now 12-12. Bears have control of 479.
Chair Powell, you have said that there has been, quote, an imbalance.
Take a
in
look
the
down
housing
here and
market.
see what happened.
But if you're a
I'm going to
Georgia
move this
family,
down below.
Parents in the mid-30s,
Got the new low on the 5-minute here, showing some weakness in the Bears right here. This is much weaker for the Bears, seeing this 1-minute break. Bears do want to see, like, if you test the 5-minute, you want to see a successful test of the 1-minute for a bloodbath down below. If they don't get that, it's looking more bullish.
Tools to foster maximum employment and price stability.
So we see some bottoming going on right here. The key here is for the Bulls to get above this 400 and take this trade higher. I might take a trade right here if I can get in on it.
The
Give me
same
just a
people who
second.
are having high mortgage costs, if they have a floating rate mortgage, are also experiencing high costs for all the basic necessities of life, and one of our most fundamental roles at the central bank is to keep price stability. So we have to prioritize that in what we do.
Yeah, I understand the tools and the mandate, but
I'm looking at
my
401
concern is
Cs.
that we could have a cure.
Currently trading
that's
63
worse than
cents. If we can trade above here and break through this 477, I'm looking to take a trade on a retest of it for a trade higher.
Continue to skyrocket. It doesn't matter to me why a house is unaffordable. Maybe the house is unaffordable.
Now
Maybe the
12.13.
mortgage is unaffordable.
Be looking for 12.30 for this
How
trade.
does the Federal Reserve consider the total price the total price of home ownership, including costs of mortgages, in executing that mandate to keep prices stable?
Housing inflation is a very important component of various inflation indexes, and the way that's calculated is the economists look at rents, and then for people who own a home,
Now, they've got this 1 minute touch right here. They need to get a new high down here. If they can't get a new high in the next 17 minutes or so, we'll see if it's over. 12:14 right now, 16 minutes left.
Prices show significant declines in inflation, not in price, but in inflation. And that will play through so that overall inflation over the course of the next 6 months or a year will decline.
If we're seeing mortgage rates go up, yes or no, does this discourage folks who may have a low interest mortgage rate from putting their home on the market and then possibly paying double the cost on a mortgage for their new house?
It certainly could. People who are in a low mortgage, a fixed rate, low rate mortgage, I would assume many of them are not moving.
Yeah, does raising the federal interest rate change the cost of borrowing for a company hoping to develop new housing?
Yes.
Does it make it more expensive for suppliers to finance expanding production and meet supply needs?
It does.
Does it give businesses
now switching to 400s? I was looking at 401. They're now 60 cents, but I just watched 400 slip below the in the money line. They're now $1.
Actions,
maybe we can get those up. No, they're going back up again.
Not control housing supply, but its actions do have a massive effect on housing.
There they go. If I can see the 400s get down to like 60 cents or something.
Years well beyond when interest rate hikes have slowed or rates have even gone down. And I know you've got a difficult job and a tough situation, but I just hope that the Fed will think more about its actions and how they affect housing supply, even as it attempts to control housing demand. Thank you.
Thanks, Senator Warnock. The last question, I believe, questioner is Senator Sinema is remote from Arizona.
Thank you, Mr. Chairman. And Chairman Powell, thank you
Who's
for
this
being here
person on a
today.
weird mic?
In raising interest rates last month by 25 basis points, the FOMC
Let me
cited
turn the
Russia's war
reverb
against
down.
Ukraine as a key contributor to elevated global uncertainty. The war has serious
They have a
energy and agricultural markets.
they have a mic and an output at the same time.
In particular, can appear in the form of higher prices of other goods and services. This feels like a substantial driver of inflation
You have to mute the
overall.
output.
And in my mind, you can't understand the global economy fully without assessing the range of possible outcomes in Ukraine. As we've also seen, the war created new supply chain problems overnight and has caused abrupt price swings in select committees. How is the FOMC assessing the economic impact of the war and the range
A buddy of mine just texted me, "This monkey sucks donkey dick."
Monetary policy.
So the principal, I guess there are two things to say. One is that the principal way that the war has affected our economy is really
All right, I guess I am looking back at 401s.
and particularly energy
I'm
prices.
bouncing between 400 and 401 right now.
The main thing, I think, really, and those have both flattened out. Energy prices globally have settled down, and they're at a higher level, and and food prices as well to some extent. So the second thing I would say.
Okay, this is positive for the Bulls here.
That it represents a significant risk.
I'm going to mute this so you can see this, okay? So we had a retest of the 1 minute. No new low, trading above the 1 minute right now. There's probably a trade in here as long as price holds. Put a stop down below. And we'll see if it's all over right now. I'm long 401Cs. We'll see if this trade higher, how long it lasts. Be careful in here. You have to take profit on this red line right here, and then you have to. You'll see in here is if price continues higher. You want to make sure that you're taking it because it's going to grind you in here somehow, and then you want confirmation for the big move higher here. Trading 67 cents on 401, 69 cents on 401Cs. $0.71 on 401Cs. 72 cents. I warn you that once it comes up, It will grind back down to 60 cents in that consolidation phase. Trading 71 cents right now. Getting into the last part of the
as I mentioned,
Senate hearings.
Earlier, I think if you look at the data,
You've
that's
got
been
reporters
coming in
asking
since
questions
earlier
now.
This year, you have seen
So this is we're
stronger
getting
labor
pretty
market
close to the end of the
conditions,
Senate
higher
hearings.
inflation, stronger
Now trading
consumer spending,
78 cents.
and also we saw some of the low inflation readings from the fourth quarter.
74
of last year
cents.
revised away.
75
You take
cents.
all of those.
I can't
they
answer
kind of
text
all-
messages
they may
while
be
I'm
to
trading.
some
Whoever's
extent
texting me right now, I
related
can't
to
look
things
at
like
you.
seasonal adjustments or
80 cents right
a
now.
warm January, but nonetheless, they all point in the same direction, and they do suggest that
I've got a sell order in for 80 cents. I don't know if I'll get it.
ultimately would need
Yep,
to
that's
raise
right.
rates higher than had been expected. Of course, we
So I'm
have
flat right now.
2 or 3 more very important data releases to analyze before the time of the FOMC meeting. Those are going to
Let's
be
take
very
this trade right here. I'm flat right
in-
now. I
in
want to
the
see
assessment we
if
have
it
of
comes
this
back down,
relatively recent
retest
data.
the
We'll be
5
looking
minute
carefully at that.
and the 1 minute here.
And all of that will
If
go
you're
into
still long,
making the
congratulations.
decision, which we have not made, but making the decision that we'll make about what to do at the March meeting.
Well, thank you.
All right, hold on.
February
I'm going to look
23rd,
for another
the Fed,
trade
the
here.
FDIC, and the OCC released another joint statement on crypto assets and liquidity risks posed to
Blasting
banking
higher now to
organizations.
40145,
It's clear that regulators see only
40140,
the current environment and are taking a more conservative approach.
40153.
these
Bears
risks are
getting
inherent to
squeezed
crypto
out right
assets
now to the daily
and how they
trigger.
behave, or is it better for the product of the
40163,
current regulatory policy landscape
40155,
for crypto assets in the US?
40160. Woo! 40168 all the way back to the
Really,
daily
in the last
trigger. Does it hold or
year,
not?
we've seen just a
Look at that
remarkable,
explosive move higher as the
set of events in
the
crypto
Senate
space.
and the Fed
Lots of
chairman are
companies
wrapping up
collapsing. We've seen
their
massive
program
fraud.
right
We've seen all
now,
kinds of
trading
things.
401.83
you
to
know,
the daily
we
trigger.
have to be open to the
Natural
idea that
resistance right
somewhere
here.
in there
Look
there's
out for a
technology that
pullback
can-
down
that
here. You can probably try to
can
re-enter
be,
that trade.
The feature can be featured in productive innovation that makes people's
401's
lives
now
better.
trading
However, in the near
$1.35.
term, we see in
Woo!
crypto activity
That was
lots of things that
60
suggest
something
that
cents to
regulated financial
$1.42
institutions
right
should be
now.
quite cautious.
$1.43.
And in doing
I'm
things
flat
in
on that
crypto
trade.
space,
I
and
got
that's
out
what
at 80 cents.
We've issued 3 or 4 releases
Just
to the
blasting
banks,
north.
along with the OCC and the FDIC. The Fed has. And they,
All right, who's
they essentially
texting me in
say,
here?
You really need to be careful.
Why do I
here.
keep
You
getting
need to be
text
careful.
messages?
It's early days with crypto. There isn't the appropriate regulation.
Hold on
We're
here.
learning lots about the risks, and they are many of the same risks that run in
Oh
other
my
parts
God,
of the
dude, I'm getting
financial
text
system,
messages
but
from
without appropriate regulation.
fucking.
Thank you, Senator Powell.
Thank you.
Thank you, Senator Sinema.
I shouldn't get mad. My wife is
the
my
Fed
wife's
must
got me
make
signed
sure
up
that
for a
workers
bunch
and
of stuff.
families are at the center of every
Bounce right
decision
off
it
the
makes to
daily
strengthen
trigger
our
right
economy.
here.
We've heard a lot today
Now,
about
what
the
you're
role
looking for here is you're looking for. We drew this out for you before. You want to see this white line come up. You want to see this red line right here come right behind it.
Investments in their workers
And you want to
their
see
communities and our
price
economy.
confirm the move higher.
Instead of spending billions on buybacks.
Any of y'all take that trade right there or not?
Our economy for senators.
Did anybody take that trade out there?
Questions for the hearing record. These questions are due 1 week
nice.
from today, Tuesday, March 14th. Chair Powell, please submit your response to questions for the record 45 days from the day you receive them.
Yeah, baby.
For the very, very good attendance.
Yes,
one
sir.
On each side. He's not here, one for health reasons, the other just because he's doing 12 different things. So I appreciate all that, and thanks for your testimony.
Yeehaw, baby.
Thank you, Mr. Chairman.
I paper handed that shit. I didn't take it all the way up here. I was like, I'm good with this right here. Now I want to see the retest and grab this. Okay, so the FOMC or the Senate Fed hearing is now ended. It is now ended. It's all over. There you go. You saw your short squeeze. Drama in the market is over for the day. You know, basically the day is over in terms of, well, we got consumer credit at 3 p.m. So you can't say it's completely over at this point. Oh, yeah, baby. Thanks for supporting the channel. Drop that tip in there. If you're making money not losing your asses in this market, please try to support the channel either by likes maybe, or closing your puts maybe, or tipping, donating. Likes are great. Tell people if you're a poor trader, tell people on social media about the live stream. That goes a long way. Show up every day. You can just do that. I always appreciate when people show up to the stream. Hopefully you didn't get caught in this. Hopefully you were long in this. Hopefully you closed your puts down here when I said I was long here. Nice giant squeeze up, tagged above at the daily trigger. Can bulls regain the daily trigger? Big question mark here. Do we get some repair? Do we get dealers trying to say, that's it, get out of here, take your money and run, bears? We're going to find out and see if we can get this 1 minute above. Can we get a bull aeroplane here? Look at that squeeze, like a gunshot. Boom. That was like a firecracker. Snap. There you go. You got that faster than FinTwit telling you it's about to end, right? Now trading 401.20. So where do we got to go? If you're a bull out there, hold on here. Oh, I'm getting some weirdness going on in the background here. Hold on a second here. Getting some weirdness going on. Hey, thanks, Latina Row. Appreciate that. Thanks, Latina Row. I see that chat from you. Firecracker going off inside the stream right now. I gotta mute all. I you know what I suck at? I suck at Captain's flat, Captain's long, Captain's this, Captain's that. I do. I suck at it. I keep getting text messages that I'm terrible at it. Now trading the daily trigger. You can see above here. We have the where the crime was committed, right? As the bulls would say, the scene of the crime, Captain. The scene of the crime right over there. Scene of the crime. How dare the bears take us down here and then sell us down, then grind all of our options to dust. Came into the end of the Fed in the Senate meeting. You got warned. I told you I took some longs here. We're going to go back here, and you're going to see this bull aeroplane, try to bash and smash and get above here and try to do a repair above at 404.50. Do we get up there is the question. Do we get up there and repair the damage that was done earlier in the day? Scene of the crime, 404.33. Or do they hold it underneath the daily trigger? Do the bulls have hope? I don't know. We have to find out here if the bulls have hope or not. I bet there's bulls out there that are like, please, please, please repair the damage that was done. Look at that gunshot above. So there's your real volatility for the day. Do we get more volatility tomorrow, or is most of that shit done? Let me know in the chat. I haven't read the chat, so what do we got going on here? We got Perry in Catalupo. Says, heck yes, supporting the channel. Salius subscribed. What else? We got a bunch of subscribers here and followers. Salius subscribed. Infernal Knight 18 followed. Oh, I gotta check this stuff out. Always love new followers. Fernando Deque, Suho Bai, or Bay. Lower South Side followed. Ack Jones is followed. Papa Atta followed. Ahino Jose 34 followed. Southern Otter followed. Louis Philippe Sazarin followed. Well, that was from this past couple days. Good job following. I appreciate the follows. Look at that right now. So here it is right here. It's setting up, okay? I want you to see it set up right now. So if you're a bull, this is what you're looking for. You're looking for a recheck of this white line down here, okay? And you're going to be looking for, I'm going to tell you exactly what you're looking for here, okay? You're coming into a 4-trigger cluster right now. There is a daily trigger, an hourly, there's actually an hourly trigger right here. I'll show it to you above. 402.76. right here. There's an hourly trigger right here. It's green. So right there, there's an hourly trigger. There's a daily trigger. There's a 5-minute and a 1-minute right here. So we're gonna be. I'm gonna draw this out. You can snap this for yourself. Snap a picture of this, whatever you want to do, and I'll show you what you're looking for here. Okay, you get the red line right here, and you get the white line. Matter of fact, what's really cool is this tool that we have has predictive trigger lines. Like they lead before price gets there. You want to see the green line come underneath, believe it or not. Oopsie. You want to see the green line come underneath right here. And you want to see the yellow line right here. Get underneath right here. And you want to see price get above right here. Now, if price can come right here, it's right around there, like right in there. If this develops and price can get above right here, it should be a squeeze, a huge squeeze. So a lot of money in here if that happens. Now, until that happens, you can't take the trade. You're going to watch this consolidate. It'll trade down to the 1 minute. Price needs to stay above it. The 1 minute, this white line needs to get above the red line. Needs to take price above the daily and the hourly trigger that's right over here. I'm going to show it to you here in just a moment so you can visualize it right here for yourself. So you see it right here. You saw that gunshot move right here. And this is called a 4-trigger cluster. The 1 minute's kind of weak though, right? See how this 1 minute velocity is coming down? So the 1 minute's kind of weak here. 5 minutes, not so good. Hourly is kind of like, hourly's rough right here. So the best trade of this, or the best trade in here is to allow price to lead higher and allow all this stuff to catch up, allow this to get underneath, and allow this to get underneath, and then it becomes an explosive move higher, and that's where you get your close above right there. Let's see if I can mute the book map here so you can see it. And you want to see this is it's called a 4-trigger cluster. You got 1, 2, 3, and 4, and you need this white line here in price to stay above it. And you need these other triggers to get underneath price. If these can get underneath price, it gets very explosive, and you can actually get a nice giant squeeze in the market. So we'll see. We'll see how this plays out into the close. Some people might think that this is the top. It might not be. These kind of clusters here can lead to giant moves higher. So we'll look and see if we can actually trade higher. I'm not sure this is going to happen, but if this does develop over the course of today, you could see a squeeze into the close. So we will look at it. We will look at it, and we're not going to guarantee this, but we are going to look. You've got the pivot line above 405.32, and you can actually squeeze higher than this. Not guaranteed. This here is just an hourly trigger, but to get 405.32 might be on the table. You could possibly even get 406. That's even a possibility, believe it or not. There's a little bit of a see the scene of the crime back here. It actually extends to the day before at 406.68. So we'll look to see how this opens up. We're going to put R1 as a PT2. We'll do this as or maybe that's PT3. So we'll write, give me a second here. We're PT3 above. I think that would be PT3 if this develops. We gotta let this play out. PT3. Right there. We'll do a PT2, more likely right there. We'll make that one yellow. Right about there. Even just a failure of this. Actually make this a little bit lower, like right here. There's your PT2. That's going to be a tough one, man. I think that's PT3. 405.32. That's right. I mean, I think the one above it's going to be difficult. but it's there at least. PT2, PT3, failure to close right here, somewhere in there. That's where the sellers are at for today at least. These sellers up here are kind of weak. The real sellers are up here at R1 at least. We know this is where the real sellers are above. And we know that the bears want to stay under here. We know that the bears are down here now, right? We know the bears came down here. They sold this shit down. They sold it down. And they sold this down. So, can we get up here? Maybe. Can we get up there to the end of the day? Possible. It's possible. You need to see what this does right here. This is going to matter for the rest of today. If you can get above this zone right here, if bulls can get price above 40250 or something like that, it should start squeezing pretty violently up to the upside. So we'll see if this works itself out. If we do get that squeeze higher, be aware if you are a bear at least, that there is the possibility of a giant squeeze forming right in this zone right here. Bears need to keep the pressure on. If they don't keep the pressure on here, it's gonna get whippy. It's gonna get whippy really fast. So just be careful of that if you're a bear. And what I'm gonna do is I'm gonna take a break. I'm gonna take a 5-minute break, 15 break. If you're gonna take a piss or something like that, or you're gonna get a sandwich, ham sandwich, a Sammy, there should be some work that needs to be done in here. Some kind of work. So it could get violent in here is my point. And if you do end up going up, it's gonna be a blast off, like rocket ship kind of thing. Do I think that there's still shorts in the market? Fuck yeah, they're right here. They're right fucking here. The next place that they are is right here. The next place they are is right here. And the big place that they jumped in on was yesterday, right? Remember we were sitting up there yesterday, we were like, let's buy a bunch of puts and see where price goes. So you guys already know that we're in the down move. Down move right now is complete until tomorrow. I don't think the Senate hearing is going to be that big of a deal tomorrow, but like not as big. I think the bigger thing tomorrow is ADP and then Jolts and Beige Book, mostly Jolts and ADP. Trade balance is important-ish, but then claims are really important on Thursday, and the employment rate and employment report, they're touching on that today, right? That's for Friday. Now, so you've got volatility set up for the rest of the week. So we could get really squeezy here. We know that this pivot is for negative gamma in the market, but above it, we're in positive gamma. So, if we get up to the pivot at least, that wouldn't surprise me today. Maybe a high target of 40532 if we can get above all of this consolidation down below here. I'm going to take a quick break. Quick break for you. And you can see where support is down below, way down below there at 400, right? You just see that big yellow line down there. Market's just kind of floating around. I'm going to take a quick break because I think this might take a few minutes. And then we'll trade the rest of the day to see what happens up here if the bulls can take over. Now, as a bear, if you're a bear out there, ultimately what you want today is you want this close. This daily trigger, man, decides a whole ton for the market. Any kind of closing underneath this daily trigger, defending of this daily trigger for like 2-3 days for bears is a W, man. Now, this is what a bear needs. And for trend reversal, bears need to trade underneath. I can show you for years. You trade underneath that. You stay underneath the daily trigger, and I'm telling you what, we're bearish. So your viewpoint right now is bearish. Your stance is bearish as long as we're under this yellow line right here. That's the truth. So if you ask me when I'm bearish and bullish, right now we're bearish. Being under this daily trigger, the bulls have to get above it to begin to take that retake that stance of bullishness in the market. Okay, I'm going to put the news squawk back on, unmute the news squawk for you, take a 15-minute break, and I'll be right back. Hope everything's been great for you. Please, if you guys know this takes time, effort, energy, costs me money. If you guys can at least like and subscribe to these videos, I would appreciate if you told people about us live streaming here every day on social media, wherever you hang out, stock twits. I don't know. Don't do it on Wall Street Bets. They get stinky about that shit. FinTwit. I don't know where you hang out. Mastodon. Whatever. I don't know all those different social media places. TikTok, or I guess they're gonna ban TikTok or something. YouTube, wherever it is you hang out, and if you make money and if you're making money ever watching this stream, becoming a better trader, please hit that donate button. I appreciate it. It helps. It definitely helps. Makes me want to show up every single day. So I'll be back with you guys in about 15 minutes, and be cool, man. I'll be right back. Let me read the stream before I take a break. I want to see what you guys are saying in here. Winky's saying this shit is so stupid. Whoop. Yep. Been with you since October. Right on, Young Traveler. Let me see what you guys are saying out there. Nino's like, now I can lose spy puts and Rivian calls. We got some cool stuff coming your way. If you're just joining us for the first time, we got some super cool stuff coming your way. It's being worked on right now. Matter of fact, we've got
forecast for 2023 world oil demand growth by
here. I'll say this:
370,000 barrels per day.
I'll say
now
this:
sees 1.48 million barrels per day year-on-year increase.
If you look at the top 6 or 7 companies, tech companies in the world, we got one of their big-time AI guys building tools for us.
US EIA cuts the forecast for the 2024
So
world oil
you
demand
pick
growth
what
by
you
0
think
barrels
is
per day, now sees a
the most
1.79
forward,
million barrels per day
progressive kind of
year-on-year increase.
artificial intelligence developers out there. I've got them, so it's gonna be badass when it comes out. And nothing like this. And I'll leave it at that for now. And it's coming soon. It's coming. We're close. We're close. Like maybe a month away from beta testing and like real beta testing with people on like you people. We're like that close for you guys, and then trying to roll it out to the public. And I think we're at
EIA says they
for
expect
general
US
public
natural
it's
gas
somewhere
consumption
around
to
2
average
months in a week or something like that.
99.1 billion cubic
We're
feet
in
per day
some pretty
in
heavy
the first quarter of
deadlines right now.
2023, down
To get this stuff
5%
out to you
from the
guys.
first
So
quarter of
stick around.
2022.
Keep watching the live stream. Tell your friends. If you want to be a beta tester, when that time comes, if you're sticking around, there'll be a breadcrumb trail for you to be one, so that you can actually test this stuff out and tell me if this is good, bad, if there's a better way to improve this stuff. I think it's going to make an impact for retail traders out there. At least we hope it does. And yeah, stick around. I'll be back in 15 minutes.
So the EIA also says they expect that the Brent crude oil spot price will fall from an average of $84 per barrel in the second quarter of 2023 to $81 per barrel in the fourth quarter of 2023, and then average $78 per barrel in 2024. So Russia's deputy UN envoy says the New York Times report on the Nord Stream pipeline attack justifies a Russian push for the UN to establish independent inquiry. And says by the end of March, there definitely will be a vote in the UN Security Council on the international Nord Stream inquiry. So the EIA says US crude output to rise 560,000 barrels per day to 12.44 million barrels per day in 2023, versus a rise of 590,000 barrels per day forecast last month. So we have put out the EIA STIO report for March 2023 on the newsfeed for those of you that are interested. Fed bids for 3-year notes total $0 million. So US Treasury's 2-year and 10-year curve hits a record inversion of minus 103.5 basis points. So 10 minutes away now to get the US 30-year note auction. So the US selling $40 billion of 3-year notes with a prior bids cover of 2 to 33 and a prior high yield of 4.073%.
All right, I'm going to stop in with you really quick here. And I just want to go over a couple things in the market with you. Hold on here. This main stream back up. Got to close an office door. Just in here, I got this PT, this 405 above here. It's going to be tough to get up there. And the only reason why I'm saying this to you is because I was just taking a look at the options chain. There's 330,000 puts on 400p. They're at 50 cents right now. 49
So
cents,
just taking
50
a look at
cents.
the preview for this 3-year note auction. So despite some risks around Powell's testimony, JP Morgan strategists see the auction as being digested smoothly, given yield levels retracing back towards cycle highs and end user demand has proven robust. And the latest weekly CFTC positioning data to February the 7th shows speculators were net short 669,000 5-year note futures, a possible source of covering demand, and dealer inventories in the 2-year and 3-year sector were net long $2.2 billion in the weekend of February the 22nd versus $359 million average net short over the past 12 months.
What are you guys saying? 1 5-minute lines seem frozen? Yeah, there's nothing frozen here. Yeah, nothing's frozen here. We're good. The 1 and 5-minute lines aren't frozen. What happens here is, that's a good question. Who asked that question? Fladronris is saying that the lines look frozen. So these lines right here, they're flattening out. What this provides is room for a move higher here, okay? So you'll see these lines come sideways, and they'll start to cross over. You'll see the white line cross over the red line on this consolidation for a move higher. Now, I do want to talk to you guys about something. If I'm looking at the, let me just check something here. If I'm looking at the options chain for where we are right now, right? I'm looking at the 400Cs or 400Ps. There's 333,000 puts on 400p. And what you need is that rocket fuel. To get that rocket fuel, you're going to need those puts to go to 0 and fuel a move higher up here. But 56 cents, 60 cents, I don't know that it gets you as high as 405. It might, but I don't think that it does. Another issue here is anyone that got caught up here, they're not going to want to print, right? They're not going to want to print any of these people up here or anyone to get back. So what normally happens is you'll see a failure before we get there, and these are dealers. They'll torch the rest of those calls above here. So you'll come back up here, and then they'll torch them. Maybe you'll get like 60, 70%, 40% of whatever you're locked into. They'll torch them, then you move on for a new day for tomorrow. So just know that dealers are working against you here, and know that as these puts get burned here, that the rocket fuel here will run out. So I'm going to get rid of this PT3 right now. Just by looking at the options chain, I'm like, maybe not. So right around here, we'll see if we can get to this PT2 above here. I think we get the failure in here. You'd really need some call buying to enter this market, and some real bears to come in and start buying puts in here to fuel this to that pivot line above. You might get it. It might happen. Sometimes it happens. Sometimes it doesn't. It depends upon who comes into the market. But right now, right now where we are, if you saw like a bunch of fucking puts worth a ton of money, I'd be like, oh yeah, we're definitely going to go to the moon. But right now at this moment, it might be a little, at least a little bit. It might be at least a little bit delayed. Make sure I got everything okay here. Am I missing is my stream actually falling behind? Maybe you're right, bro. I'm checking to see if I've lost my stream here. I am frozen. Yeah, I can see that I'm below price over here. I can see on one chart that I'm below price. Yeah, this chart here I can't. So I've got more monitors. So you guys see this right here, and I look at a different monitor. So this monitor here that my cursor's on is frozen, but the one over here so I got another monitor over here. See that monitor right there? That's the one that I watch. So I apologize for this one not being up. So I couldn't tell.
So just under 5 minutes away now till we get the 3-year note auction. So the US selling $40 billion of 3-year notes. With prior bids covered 2 to 33.
Am I frozen?
4.073%.
Yeah, so like this, so I've got, so on my side, so you guys can't see this, but on my side, I've got 1, 2, 3, 4, 5, 6, and then I've got the 7th one pumping in another screener. So sometimes what you guys see is a different. You guys are seeing this one right here. I just reset this one. We'll see how that goes. I'll give you a time check right now. Yeah, I might be having I wonder if I'm having any kind of like lag here. I might be having lag here. Hold on. Let me check. Is it are you having no, I just reset it. So I have I have charts on different screeners here, and then I've got charts on different screeners over there. Let me check the stream health real quick. Can you guys hear me talking out there or no? You guys see me waving? Looks good to you? Okay. I'll give you a time check right now to see if we're live with you guys. So on my end, it's 12:59. I'm going to open a different screener in the background here. Good? Okay, good. Yeah, I've got like 1 minute charts on another screener that I look at that weren't frozen, but the one that you were looking at were frozen. I saw that. I looked up and saw that here. Coming back down, retesting the low down below right now. Yeah, 400 Ps are now at 84 cents. They were at 65, 50 cents earlier. And you're not going to get the fuel to go higher when you have 300. So you got 350,000 puts. They were at like 51 cents or something like that. And you're not going to get the move higher if with 50 cents left on those puts. You're not going to get the fuel that you're looking for. Might grab some calls here. Hold on here. Yeah, now I'm having some issues on the back end on some other displays here. Having some streaming issues here. Give me a second here. I'm going to have to reset the stream. I wonder if I've lost the YouTube stream here. I think I might have lost the YouTube stream. Hang tight here. I'm going to have to reset this stream right now. I don't want to. Give me 1 second. I'm going to end this stream and try to reset it one more time. I've got